Hello, hi everyone. Welcome back to our Investment Summit for 2025 quarter one.
Yes, it's something that we do every single quarter to update all the investors on what is happening in the market right now.
Yeah, so thank you so much for joining us on a Thursday evening. I hope you guys have had your dinner, and if you're still having your dinner, you can just play this in the background as a chill podcast.
Yes, and if you like to find out more risk investment, you're in the right place because today we'll be having some exciting updates about what is happening in the market right now in the quarter one 2025 and most importantly in the year ahead. And that's where we can find hidden gems and where exactly are we supposed to invest in right now.
Yeah, so we have so much prepared for you guys. So let's dive right into what we will be covering today.
Okay, so first up, we'll be covering about property bubble. Okay, we assess it every single year and every single quarter. If there's a property bubble coming up, we'll tell people, hey, stop investing because the bubble may burst. But if there's not no bubble, then we say, okay, the market is still stable. So that's something we will be running through in a while. Okay, and most importantly, where's the property market heading to?
Yep, and besides that, quarter one, we've seen some of the new launches. We've seen the new launches done pretty crazily. The take-up rates have been insane. So we'll touch on that, what were the demand, what were the prices that have been sold, as well as what is the market response in terms of buyer trends. We've seen some that did well, some that didn't do as well. And we also touched on what is the upcoming supply in 2025. If you're looking for a new launch in, let's say, quarter two, quarter three, or even the second half of 2025, we'll be sharing with you what are the launches that is coming up, where they are at, what are the estimated prices. And then last but not least, we also share, we have some landeds that have been bidded in 2025. And these will be 2026 supply, but we'll be sharing them with you so you get first-hand information.
Yes, and with that, we can spot opportunities. Where are the opportunities in 2025? So stay tuned to the end, and that's where we'll be sharing our investment strategy. Like this season, what are we doing exactly in your portfolio? And I'll be also sharing about a very vulnerable side of my story, of how exactly did I manage to own 9 properties from journey right from the start to the end, and what happened to my parents because they didn't invest in property the right way. All right?
Okay, so before we start, I just want to thank you all for subscribing to our YouTube channel. And I think we've hit 16.3K, so it's a huge accomplishment for us. So thank you so much for supporting all our videos. So do subscribe if you haven't, so you'll be updated for any of the new videos that come up. And also, if you haven't, do join our Telegram channel. You can just scan the QR code on the screen. That's where we keep all our audiences updated whenever there's a new video. Sometimes if there is a new promotion from our partners, we also share them on our Telegram. So do remember to join. And then, of course, if you want to have a little insight on the behind the scenes, that's where our Instagram page is. Normally, we post behind the scenes on, what we do at JNA, updates on the listings that we have, updates on our YouTube videos also. And last but not least, if you're someone that just doesn't like to watch videos, right, but you don't mind listening, or if you're doing housework or you're running and you just want something in the background, you can also tune into our Spotify podcast.
Yeah, those who like to run on the go and listen to podcasts.
Yep.
All right, so without much further ado, let's jump straight into the topic today. Okay, first up, we're running through every quarter is every quarter kind of custom that we will run through. Is there a property bubble in Singapore? Okay, some recap of what we have done so far. We actually look at this thing called a property bubble index, actually done by UBS, a bank. Okay, so how I read this chart is that if you have an index of about 1.5, okay, then don't buy property, there is a bubble and it may potentially burst. Okay, if it's between 1 to 1.5 means it's slightly overvalued. If it's below 1, okay, 0.5 to 1 means it is fair valued. And if below 0.5 means that it's undervalued.
Yeah. So why we also look at property bubble, right, and why it's so important is also because this is one of the key criteria on what causes property prices to actually crash. So if you don't know, property bubbles also form when there is an over leverage in the market where, people basically over leverage more than they can chew. And when something happens, they cannot pay off. That's when the whole bubble actually bursts.
Yes. So with this index, we can gauge whether there is overvaluation in the property market. Okay, so we can see in 2022, okay, the property bubble index in Singapore is at 0.5. Okay, so it's really fair valued. 2023 is 0.47 and 2024 is 0.59, which is the latest that we got. Okay, so you can see right here, although yes, the property bubble is 0.59, maybe it's in a fair value range. I would say it's still within the healthy level up to date. So with people who are looking at the market right now, I know this on the ground, we don't see people say, wow, market price too high, stop buying, run. A lot of people say, hey, what to buy next? I think this is an interesting conversation.
Okay, there is always the price is too high.
Yes.
Nobody ever says the price is cheap or suddenly very fair, right?
Yeah. But one thing we notice on the ground is that people are not like saying, okay, stop buying. We are very fearful, but we see
It's more on what to buy.
which is very interesting. Okay. And as compared to the whole entire world, Singapore is actually considered as 0.59 fair value as compared to places like Tokyo, Zurich, Miami, where the prices have already hit a bubble. But in general, because of high interest rate environment, most of the property price index have been pretty low in the past few years while the market caught up. Okay, and one thing that we actually trace, okay, this is a 2024 report for Property Bubble Index. We look at how much the price have grown over the years. So let's compare the 20-year average, okay, compared to 2010. You can see where the price went up 30%, 2007 went up by 15%, 2018 where it went up by close to, I would say, 10%. Okay, property price has been still, I would say, going below the 20-year average, and that's what the government wants to do. They have consistent growth. Okay, and if we trace the entire report, I mean, we go deep into the research, we found out that what they mentioned is that the income growth actually outpaced our price increase. So this sets very strong fundamentals. And if you look at the current property bubble, it's considered as moderate fair value, and this is because of the recent cooling measures that comes in that make sure that our property price don't go out of the fundamentals. And most importantly, we have the high interest rate environment in the past few years, and our income growing, our GDP growing, that creates a very strong fundamentals for our property market in Singapore. Okay, and as usual, every single quarter we'll trace this thing called GDP growth. Okay, so why look at that? It's because if you already plot the chart, okay, between the GDP growth, which is a gross domestic product, which measures our economical output of Singapore market, and you pack it against that of the property prices in Singapore. Notice that this is the blue line. Okay, over here, that's the GDP growth. The Singapore property price changes is measured by the red bar. You notice that this coefficient, okay, correlation is at 0.74, which is pretty high. So that is something that we're constantly tracing to make sure that there is no there's consistent growth in the GDP that's about our.
It's not saying
price.
that property prices are growing crazily, but income is not growing.
Yes.
So we also hope that bosses always increase income. So at least we are on par on where the property market is going.
Yes, and with this, if you were to trace something very interesting, is that our GDP growth has been positive, in fact, for the past 2 years since 2023. Okay, the last one that happened that was very bad was during COVID-19, 2020, which we'll trace later on. How does COVID-19, why doesn't price crash in COVID-19? Okay, and if we look at our MTI recent update in quarter 1 2025, it would project a growth of 1 to 3%, especially with all the trade wars coming in, but the market, I would say, is still moderately positive, not like negative. There will be a shrink in GDP growth.
Yeah.
Okay. And if you look at a recent report done by DBS, a research has done, which is very important, to look at what exactly is an economic outlook for 2025. There are 5 things that actually caught our attention. Okay, the first part is mentioning about growth expect, where property Singapore market is looking at about 2.8% projected growth in 2025, and the focus will actually be, interestingly, semiconductor, which is one of the driving factor in Singapore economy. Okay, so how does it link to real estate is that with growth in the economy, in more higher economic output, what we see is that the price in property will not be, I would say, stifled, because GDP growth actually means income growth, and income growth means higher affordability, and this will allow people to be able to buy property, and that's something that we trace consistently. Okay.
Anyways, we can see your comments. I can see Aspen, right? So if you guys have any questions while we are doing the live, just feel free to type in and we'll be happy to answer them also.
Okay. Yes. And the second thing that we look at is our special economic zone. There'll be a new frontier that's done between Johor and Singapore to expand this particular part, especially in data center, electronics, renewable energy, and tourism. So it's something that's very important, because if you were to trace the growth area, this is where we can find deals that we see where are the growth area in Singapore, and from there find all these opportunities when it comes to investment. Okay. Third is in terms of inflation. Okay, they are saying that inflation won't be going too high, which is, I would say, a good thing so that people can still be afford I would say, goods. And in fact, property wise, income to property price ratio is still pretty moderate, which is a good news. Okay, and the fourth thing, okay, very interestingly, is that currently, in terms of our balance sheet, in Singapore.
Yep.
They're saying that it's still very strong. In fact, they even have a surplus of $1.8 billion in terms of national reserve on top of house balance sheet. So it presents a very strong, I would say, support when it comes to our prices, because our house balance sheet, if it's strong, if we have enough cash, when it comes to economic downturn, we are still able to buffer that.
I think Singaporeans in general are a little bit more conservative in a way that, when they invest, whether it's equities or whether it's real estate, they don't usually all out. They usually have a safety net, which we always encourage our clients, right? Whenever you invest, the key thing in investment is always affordability. So always have your safety net set aside. And I think that's also why in 2019, when COVID actually happened, the rebound was relatively quick because everybody only had one house and everybody had I would say quite a safe amount of savings to be able to continue to pay off, even if there were any changes in, let's say, the income.
Yeah, so this presents a very strong fundamental for Singapore property, and we don't see a crash that happens when even COVID-19, where the GDP dropped by close to 11 to 13%.
Yeah.
Okay, and the most important thing that we have been tracing and looking at is this thing called the $NER SNEER policy easing. Okay, so what Singapore is currently doing, in fact, they are lowering interest rates. They are easing the fiscal policy such that it's easier to borrow, and interest rate. Okay, we have done a webinar about this before. It's very highly correlated to property prices.
So for those of you, right, who are locked into like the high interest rates previously, go and check in with your banker to see, if there is any way you can like reprice it, calculate like, if there's if there is a penalty, does it make sense or not? If not, you can also reach out to us and then we can also do a calculation to see whether it makes sense for you to kind of refinance it.
Yes, all right. Okay, so before we move on to our first half, okay, what exactly land beats, okay, let's take a look at this final part. Is that a lot of people may ask, why during COVID-19, GDP dropped by 11.9%? But if you notice, the property price did not crash like last time, like the Lehman Brothers times 2008, the 20 to 15%. And in fact, after that, it starts to go up. Okay, so if you understand the whole entire concept of property bubble, one thing that we trace very closely is to look at how is the affordability of housing as compared to our income. And most importantly, by doing that, right, we look at this chart, okay, which is the property bubble technical analysis. Over here, if you look at this particular diagram, this is something update every single quarter.
Yeah.
Okay, the orange lines represent our GDP, okay, our real GDP. Okay, and the blue line over here represents our property price index. Okay, so property price index traces our prices for property price and also number of transaction. So we pack it against it and normalize in 1975 upwards. So you notice during the four big incident, okay, 1980s depression, Asian financial crisis, dot-com crash, and global financial crisis, these four things have one thing in common. We notice that the blue line actually exceeds the orange line.
There's just a little bubble on top before every crash that comes down.
Yes, and that's when we can see why there's a bubble, because property price rise way beyond the fundamentals of our income growth. And that's when it reaches a peak, and when market goes down, the price will crash. Okay, and if you notice about this, something I advocate with our clients consistently every single to educate more and more people about this, is that the main cause of property bubble, okay, bursting, is because people over leverage. They borrow way beyond their means, and when that happens, okay, when economic downturn happens, okay, people cannot afford to pay their mortgage, and that's when they can bankrupt. That's when they finance their price, and that's when the price will crash.
Correct. So I think all these happened before the 2013 cooling measure, right? That's when we didn't have much experience. There was no ABSD, there's no TDSR. Our parents' generation, you could buy as many as you want as long as you have the money. If you go to the bank, more than often the bank would love to lend you the money because that's their business, right?
Correct.
So when anything actually happens, when let's say like they lost their job, for example, and they cannot pay the mortgage, right? If they're holding 7, they got no choice. They can only hold their home. The other 6, they have to foreclose. That's what actually caused the property bubble to burst and the prices to crash. But in today's market, with ABSD, everybody can hold one. You can hold multiple, but you're going to have to pay ABSD, which is not worth it, and nobody usually does that. So when you're holding one and you're tied to TDSR, when things happen, for example, during COVID, you don't really hear people say, hey, let's sell our home.
Yes.
Because they only have that one home. And I think because of that, because of the cooling measures from 2013 onwards, it made Singapore property prices a little bit more stable in a way that Singapore government doesn't want it to shoot up too crazily, but they want it to have a stable growth.
Yes, and holding power of individuals will increase.
Yeah.
And one of the key highlight of cooling measures is actually this measure called a TDSR, total debt servicing ratio, okay, which happened in 2013, 29th June. And what it does, okay, which is very important about loan borrowing, is that before the 2013 period, okay, TDS that came out, an individual with 10K income, 30-year-old, at a 3% interest rate market can borrow about 2.174 million. Okay. After this came out, okay, the borrowing power dropped to 1.339. Exact same profile. Huge drop, yes.
Yeah, borrowing power.
Yeah. So what happens over here is that while borrowing power drop means you can no longer leverage and over leverage beyond your means. And it's not by bank, it's actually by MAS to set this guideline. And from there, you have actually more cash savings. You have more safety net. And that's something that a lot of people are advocating.
Yeah.
And this idea of saving along with not being able to borrow way beyond their means allow the market to come to a state of equilibrium where you no longer have people borrowing way beyond to just buy property, but rather being safe when it comes to buying investment properties.
Yeah.
And kidding, after 2021, they even tightened the borrowing power. They drop it to about 1.085 million. And this once again creates a very safe, I would say, safe haven for locals to not over leverage and be able to save up more, such that when it comes to economic downturn, there's still cash savings to finance the loan, even up to 9 years or 8 to 9 years even. Okay.
Yeah.
So this really summarized the update of the market, which we do every quarter to make sure that we don't have prices going about 40-50%. And yeah, then that will be way past the fundamental of Singapore property. All right. And if you look at where we are today to end off this chapter, the GDP over here, okay, which is the orange line or the golden yellow line, currently is actually above our property price index, which unlike last time where you see the blue line way exceeds the orange line. Okay, the orange line currently is actually above that of the GDP is above that of property price index. It shows that the market, I would say, is still quite stable.
So income is still on the uprise as compared to property prices.
Yes.
Despite everybody saying income is not high enough, based on the data that we have, GDP is actually on par with the increment in property prices also.
Yes, indeed. All right. So with this, let's move on to the highlight of today's topic. 2025 Singapore new launch market summary.
Yes, how the quarter one condo launches did, what is coming up. So there were, I think, a total of 7 new launches, right, in the quarter of 2021 from Ori, at Toa Payoh to Bagnall House to Parktown, at Tampines, Alta at Clementi to Lentor Central to Ori, and then we also had the ECRL at Tampines.
So why we're looking at this is because by looking at how the past performance of these launches are, we can gauge, okay, what is the market sentiment.
Yes, comment what you think was the best launches. Comment what you think like the launches that didn't do as well, and then we will, before we show you guys the answer, right? There were, I think, relatively most of the developments did pretty well, except one.
Yes. And let's review the answer in the next slide. All right. So this is the percentage sold. Okay. Generally, I think it's pretty crazy. Like you can see, like Ori hitting 86%, the Parktown now close to 88% already. Okay, and in fact, Lentor Central 95%, and the EC also hit about 91%. So most of the inventory, okay, 3,320 units was sold.
Correct.
Okay? And coming second in place, I would say second in place is Bagnall House, Alta, okay, which I would say about 65 to 71%, which is still quite decently well done. Okay. And the one that really didn't do as well, okay, it is project called Aurea.
Yes, it sold 23 units out of 188 units.
And this really shows one thing is that if you have a small development, 188 units, not a big one, and you are located in a certain area in CCR when the price gap is very high and the demand in the area is not very high, this is something that you may get.
I think consumers today are a little bit more educated. Like information is known and it's transparent, right? So there are certain things that people do stay away from that the demand is not as high. Like what you mentioned, right? Small development is one. So these are also projects that, from an investor point of view, you may want to consider to avoid, because when it comes to exiting, it'll be a bit difficult to exit also.
Yes, because the primary market at 12%, also a reflection of secondary market, where the people are willing to buy into as a TOB project.
Yes, or like in terms of like unit type, right? You realize that one betas don't. Like there is a demand that shift. Like last time, one beta they tend to fly off because they are the lower quantum ones. And now you realize one betas are the ones that are being left behind.
So the market has moved on. Okay, so in terms of one thing to trace demand is to look at number of checks collected.
Yes.
Okay, this is something that we are always looking at to see where the demand are.
Our clients always say,
Yes.
so how many checks collected? How many checks collected? Because they want to know who they're competing with also.
Yes, they say hope I really get the number one out of the 2,000 checks. Yeah, and you can see over here, the one that really performed way past is Ori. 2,200 checks over 777 units.
Yeah.
Almost three times, more than three times. Yeah, and in back the house, okay, we have about 200 checks over 130 units. Okay, Park Town, okay, 2315 checks over 1195 units. So you can see it's at least a 2 times to almost a 3 times kind of demand.
Yeah.
And buyers are really on heat right now. Yeah, and if you look at others like your Alta. Okay, even for 500 units, you have about double 1169 checks. And in terms of EC, okay, it's always the all-time favorite for a lot of people to buy the EC. 760 units, 1171 checks over 760 units. So almost 1.5 times. Okay, and the last one is, okay, we have Lentor Central. Just launched a few weeks ago.
Did very well.
Which was what was predicted because the price it launched was like very cheap.
Yeah.
And that's when you can see 168 checks collected, double out of 477 units. Okay, and we have the I would say outlier.
The outlier. This is really the outlier. Like everybody
Yes.
had more checks than units, but here is 188. It's not 40 units and 188 checks. It's 188 units and 40 checks.
Yes, so I say 0.2, 20%.
Yeah.
So this is some example of developments that, because our price is launched, okay, that's what usually this developer tend to do, launch at a high price and waiting in the market to catch up. But this is when demand in the area is not really as great as compared to the supply that is launched. Okay. So with this, okay, there's a round for 2025 up to date, first quarter launches. Time flies, so 2 months, 3 months really passed. So let's take a look. Okay, the most important part is what is the upcoming supply and where could be the opportunity? What exactly can be the launch price of these developments?
Yes, and I think we also have a question, right, by Limpa. Can you discuss later whether Lentor Central, and that's a question that a lot of people actually have, like, how come launch so low, which is a bit surprising because it's still the same developer, right? And did it actually spoil the market for Lentor projects? So I think personally, they had to launch, that their starting price had to be low because they were the highest in the entire entire Lentor area. So whenever you have a high project, right, your starting have to be low. If not, your jump towards the end, right, it goes to a crazy price. I think if you're holding a 3 beta, the competition wouldn't be as strong as, let's say, a 2 beta. Because 2 betas, there'll be a lot of supply in the market when it comes to TOP for investors. 3 betas, I think a lot of them are own stay. So we have clients that also bought for own stay in there. And when it comes to TOP, then there wouldn't be as many competition per se.
Yes. And one more thing is what Grace mentioned. If you talk about average prices of the Lentor Central, it's actually higher. And Lentor Central did a very interesting thing. They did a quantum play.
Yes.
Even for the 4 beta, they had 2 different layouts. One is a 4 billion compact that is, okay, price is cheap and then it moves. And then there's another, the 4 billion premium, which sets a new benchmark of the 4 billion area. So it creates this kind of, I would say, different buyer profile for different groups. And that creates that particular benchmark hedge again. So it really depends on what layout you buy. And the key thing is to buy the right entry price. That's the most important, even in a certain collection itself.
Correct. So I think Lentor Central, one thing also, it doesn't have the school, but then, then developer have to play along. Like, if I don't have the school, then I have to kind of play with prices. But if let's say someone comes in and they really need the school for 1 km, then Lentor Central will definitely not be something they will consider. But then again, not everybody considers it for school. So I think when developer take monopoly over an area, they really try not to build competing products. In a way that if you look at Lentor Modern, right, their 4 betas actually even reach like 3.3 million. But a family that will look at a 3.3, 4 plus study will likely not be the same profile buyers that will look at a Lentor Central Quantum.
Yes. All right. Okay. So with this, let's move on to today's topic about the upcoming GIS that's awarded. Okay. So with this, right, there are a total of 3 kind of launch we're looking at. One is this year. Those have bid already. What are the launches that is coming in the second half? I think a lot of people are excited to know about it. Okay. Second is 2026. Okay, those they have bid already, but won't be launching this year.
It's very far out, but we'll give you first dibs into the plots that have already been bought.
Yes. And most importantly, 2025 pipeline, what is the one that reserve and confirm list? And from there, we can sort of have a market sensing of where the launches will be. Okay. So as compared to 2019, 2020, where there's 40,000 launches, actually this year in 2025, we don't see a lot of like a flood of like launches or a supply. So that's something that we will analyze later on to have a better understanding.
Correct. So I think from today's session, there are so many plots that we're going to be sharing. So we won't have time to dive into each specific plot, into the detailed analysis. So if there is any plot that you want to find out more about the analysis, do contact us and we can share that with you also.
And yes, and at the same time, okay, there's a QR code right below that's on the screen throughout the entire video. Okay, so you can actually scan it, and we have the 2025-2026 launches that's coming up along with any questions about real estate investors. Feel free to ask us, or in fact ask the JNA broker that brought you
so
onto
they
this
too
channel.
also have the new launch guide, and they will also share it with you.
Yes, all right. So much further, let's go. Okay, about 2025. What exactly is upcoming condo launches?
Yeah,
okay?
so I think I think the one that's coming up immediately, right, will likely be Bloomsbury at Media Circle.
Yes.
It's going to be the first Media Circle plot, so it's going to be something interesting. People say, is it going to be the Normanton 2.0?
Yes.
Right, because it's right across the highway from where Normanton is. So you'll see that the break-even price for Media Circle is about 2,076. It's after area harmonization, so the actual break-even goes to about 2,200, 10, 15, 20. I think it will likely be about the 2,005. I think they may launch a bit lower just because it's the first plot, and usually when you have plots that are not near the MRT,
Yes.
and you cannot sell MRT, you cannot sell school because they don't have school also, and they don't really have amenities because it's quite a new area. The only way developer may be able to sell it or track crowd is through pricing.
Yes.
Yeah.
So they may want to launch it low so that it can attract a group of buyers and then slowly price it upwards.
Correct.
Okay. Now we use a 358, so I would say it's a mid-size development.
Not a boutique and not a mega development also.
Yes. Okay. And one of the comparative we can really compare, as mentioned, as Normanton 2.0. Okay. Is this really another Normanton? Okay.
Yeah.
So
similar location but very different development size, because Normanton is 1,800.
Yeah, so back then when this launched by Kingswood, okay, it was like, wow, so many supply, how can we sell? So let's see how they perform. Okay, so for Normanton Park, if you look at the price, okay, for the price growth, 936 square feet, a 3-bedder
They
compact.
actually did really well.
500 plus K. Okay, which is interestingly about the same as the 4-bedder in this area, which is also about close to 469K.
Correct. I remember Normanton was a development that at that time it wasn't the most well received because firstly, there were a lot of comments on developer at that time.
Yes.
Secondly, the location is something new or something that is not convenient at all. Thirdly, there is like 0 schools within the 1 km. There is no amenities. There is no HDBs, right? So from an own state perspective, it really didn't tick a lot of boxes.
So why exactly did profit so much for our own 3-bedder compact? So with this, right, what we went to see, this is something we also traced for Bloomsbury, we'll see in a while, is that Normanton Park back then, when they launched, it was about 1,776 per square feet on average for the 3-bedders. Okay, and what we see over here is that the RCR new launch average back then was going at 2,056 per square feet. Okay, so you are launching about 280 per square feet lower, and it's, I would say, the cheapest RCR new launch in the market back then. So there's a buffer that we don't have to end up selling at a much higher price. We just sell at the same price at 280 per square feet gain is what is sort of, I would say, guaranteed. Okay, and if you look at quantum, which is the total price, the price tag of the Normanton Park 3-bedder is going at 1.739 million, 1.734 million. And the RCR new launch 3-bedder average was going at 2.084 million. So once again, you can see the 300K below the market value, I would say, is something that we always look at to see where there's a buffer. And that's why Normanton can sell even higher, 500 plus K, and make 200K higher than what people bought back then in 2021.
Correct. So this is an example where a development with very bad location and very bad rep and no amenities actually performed very well because of the entry price back then.
Yes.
Yeah.
And that's something that we trace. And in fact, today, okay, this is something that we'll be using this as a benchmark.
How is it
RCR.
comparative in today's market?
Yes. So today's market, you can see a lot of the new launch RCR already hit 2.667 million. Okay, on average, okay, 2025 this year, and the average PSA at 2,670 per square feet. Okay, so if you were to buy with the right entry price, the right demand, and of course, every different area, you need to factor in that valuation matrix to see what is the right price to enter. That is when you're able to safeguard this particular prices and see how much you can grow for this property.
Yeah. So I think going on to the estimate prices, right? Layouts have all been out already, but we won't go through in them today. This whole thing will probably take like 4 or 5 hours. But if you're keen to know which layout or which stack it's better in terms of investment wise, do reach out to us. Initially when we saw this without the floor plan, we saw 3 plus study 900 square feet. Like,
yes, wow.
the developer did a really good job. Then after that, when we saw when the layout actually came out, we realized, okay, like the study is like one
small little corner.
Yeah, really one small corner, and then they had this like very long corridor at the front.
Yes,
so again, it always boils down to layout because it also plays quite an important
I think it's
role.
very interesting branding. They put a study there.
Yeah,
It reminds me of
yeah.
Treasure Tampines. Back then they say the 3 plus study. Sounds what
Then
a
when we
study.
open, the study is like one corner.
Just one small corner. So I would say it's more like a 3-bedder compact in this sense. Okay, so that is something they observe.
It's like a naughty corner.
Naughty corner. Yeah. So but if you want to analyze more, of course, feel free to watch our video of Bloomsbury and notice that in the layout comparative, our investment team and also in JNA real estate broker who have served you, have we done a breakdown of all this investments. So investment analysis. So that's something you can ask us or ask any of your broker who brought you here. All right.
Okay, so next one, we have One Marina Gardens. OMG.
Yes, wow, OMG, literally, oh my god. Yeah, so interestingly, the break even, because they bought it at a decent price, is about 2,361 per square feet. You talk about a 10 to 15% profit margin, it will be about 2,007 to 2,900. Okay, and if you look at the launch price, okay, very interesting for this project, they actually launched it about 2,700 per square feet to 2,800. And this is something that I would say is a RCR price, but not CCR. But okay, there's a reason behind that. Okay, so CCR market at Marina is a area, a district that we're reading through, analyzing, and it's an area that the demand for houses is not the highest as compared to RCI and OCR.
Correct. I think when we look at demand in areas, you also need to know who's the potential buyer profile. So for example, CCR in the past, it was always driven by foreign buyers.
Yes.
And when the 60% actually came in, it really affected the CCR prices because that's where the most of the demand actually comes from, right? And people that usually got the budget to buy CCR, they generally like the newer ones. So yes, you will see new launches, like certain luxury projects, they sell very high.
Yes.
And you realize that the resale gap in the CCR, it's very wide. Because when it comes to the secondary market, the people that can buy in CCR for foreigners, they wouldn't be the ones looking at the secondary market.
Yep. So this actually creates, I would say, less demand, and that's why it's factored into the price. That's why you see price 2,700. Wow, so cheap. But there's a reason why the price is as such. So of course, you need to analyze accordingly what exactly is the right price to enter, even in this kind of area, and factor this particular perspective into it.
Yeah.
Right?
Okay, so the next one after OMG will be 71 Science Park Drive. It will be something that not everybody would talk about because it's actually not a GLS. So fun fact, Capital Land it was actually a DSTA, it was actually previously a DSTA project and it was actually torn down in 2020. So similar to Jayden, like how they turned J-Cube into a residential plot, this is what they're going to do with this one. So this is going to be the first plot in actually Science Park and it's actually walkable to Cambridge MRT.
Yeah.
So if you do miss Bloomsbury, the pricing is not good, there is no need to rush into it because we're going to share with you, Media Circle, there are multiple plots and 71 Science Park Drive is going to be the next. Also mid-size project, about 300 plus units.
But with this revamption from like what happened in Jayden, you notice that this kind of plots, they tend to be selling at a much higher premium because it's near the MRT. And something that they may want to play on is the Science Park transformation.
Yeah.
And the prices also may not be as expected to be cheap. So there's something that you need to put into perspective when it comes to looking at this kind of plots. Rather than say, okay, I will wait for next one, maybe it'll be cheaper. So that one, we do have a site analysis to see what exactly this Capital Land may be launching at. So that's something we can discuss on a one-to-one basis. All right. Okay, so next up, De Souza Avenue. Okay, this is really, really all the way deep in. And near to Verdure, Upper Bukit Timah, and go all the way down is the old Jurong Road. Okay, interesting, but because this area is not even Jurong, it's actually nearer to Upper Bukit Timah, De Souza Avenue. Then land bid was interesting low, about 1,006 per square feet. Okay, consider OCR area. Okay, it had a 10%, 15% profit margin of about 1,009. Okay, 355 units, a mid-sized development. Okay, so interestingly, because this area is really far out, near the Verdure, near to all the way down the OCR area, there was only 2 bidders who bid for this land. We have SL Capital and also Capital Land, who actually went for this land bid, and they're quite close. We have the first being SL Capital who won the bid.
Yeah.
Okay. And if you look at this area by itself, right, at 2,000 per square feet, it's really setting an OCR, I would say, an OCR plot that is very far from places not near MRT at all, but their pricing sensitivity potentially because of that.
If they do launch it at that price.
Yes. Yeah.
Okay, so next step after Isalza, we have Margaret Drive. Okay, so we went from a little bit more ulu to a much better location. So Margaret Drive, it's near Queenstown MRT, right? It's going to be walkable to Queenstown. And I would say they got the land bid pretty low. They did a good job in bidding for this plot, right? But of course, it then doesn't mean that the developer may launch it. But there's always that hope. So 460 units, if it's 15% profit margin, it's going to be about 2,005 thereabout.
Right.
So one thing you'll note is that there were two developers that actually bid for it, Hong Leong Guoco as well as Sing Holdings. Some of the requirements that they do have for the developer is that they will need to build a childcare center that can at least hold, I think, 100 children.
Yes, so this will be in the second half to the third quarter. So let's see how this launch. Because if Gokulam were to be very conservative, then yes. But if they want to price it high, that's something
because it's next to the MRT. So I don't think they may or may not, but normally once a development is near the MRT, and especially with it being in a not too bad location, right, there'll be a lot of demand and hype around this. And normally when there's a lot of demand and hype, like Trump Park, the developers tend to take a little bit of an advantage because after all, they're still business people.
Yes, indeed. All right. So next, very interesting, we have this plot at Faber Walk. Okay, land bid 1,682 per square feet. You add 10 to 15%, that will be about 2,000 to about 2,1.
So actually got this also pretty low.
Pretty low, yeah. I guess it's really the new batch of the OCR land plots. That is very interesting. And 399 units, I would say a mid to big size development. And if you look at the bidders who have bid for this land, okay, there are three bidders, okay. We have Gokulam winning a bid, okay, and Gokulam once again. That's why they're so aggressive. And one reason why they want to cash out Lentor and Lentor collection is they want to make sure that this money is actually poured into other land bids and they successfully bid for this kind of land. Okay, and the second place we have Oasis, then we have Apex Asia Alpha Investment, okay, which is interestingly, I would say one of the developers that I would say taking a back seat, not very well-known developers, but to bid for Faber Walk, they are very confident. Okay, claiming most of the OCR project recently at Atlanta Collection, they're confident that they can maybe redo this same feat again.
Yeah. So one thing to note about this plot of land is that it's not going to be a high rise, it's not going to be like Alta, it's not going to be Atlanta Central. A plot ratio is only 1.4, as with the surrounding developments also, right? Because you're nearer to the landed side. So it's going to be low rise of 5 floors.
Yes.
So some people, they don't really like low rise, and this may not be for you.
Yes. Yeah. Right. And one more thing to compare, very interestingly, because if you look at the surrounding Park River, Twin View, and Windsor Grand, the prices have risen up to even close to 1,009 for Park River, for Windsor Grand, which is the newest project, followed by Twin View and then Park Rivera, because it's just right beside AYE, so it's a little noisy. So these are the prices that we will be seeing in the area. So if they were to launch this price very similar to the resale, I would say it does have a competitive edge to consider.
Yep.
Right?
Okay, next up. Next plot that's coming out, next launch is coming out is Upper Thomson Parcel B. So this is an extension from Lentor. Those that miss Lentor, they may be looking at this next plot. And then people ask, how come start with B? Where is A? So we also share with you, A, it's coming up. A previously didn't go through the bid just because there was this new initiative of long-term service apartment, and basically no developers wanted to take the chance on that plot. Yes. So we have Upper Thomson Parcel B coming up. Break even is 1,688. So we say A actually also relatively lower than what they bidded at Lentor Central. So if you were to actually see, there is one developer that actually bidded for it, and it's still Guoco. So it seems like taking monopoly is not enough, of Lentor is not enough. They also want to take monopoly of Upper Thomson.
Which is Springleaf, right?
Which is also good, is also good because then, they can kind of control the prices.
Yes.
Okay. So if you were to see, they did get it about 7.8% lower than what was bidded at Lentor Central. But when you go and check back, right, there's always an underlying reason for it. So one thing that we realized about this plot of land is that there is a conservation restriction to it, meaning the last time it happened, I think, was Avenue South, if I'm not wrong, right?
Yes, conservation.
Yeah, there's a conservation. So this one, there is a school over there. And sometimes when, I think the developer is pretty smart. The government is pretty smart.
Yes.
Sometimes when they want a park to be done, right, they say, okay, I add this into the requirement for for you to bid the land. If you want to, like, okay, if you want the land, can you build me the park? Yep. This one is, you want the land, can please preserve my school. So you cannot tear down the school. There are certain things that they want you to keep. So of course that also means higher costs from the developer, and they have to bid like slightly lower just to like kind of cover the cost. Lah.
Yes, because the school is only a few story high. They can't build high rise as what they intend to. So these are costs you factor in. And one reason is potential also because Springleaf compared to Lentor, I would say Springleaf is still a little up to the north. I would say closer to OCR right in the RCR fringe of Thomson area. So that could also be a reason why the price can be slightly lower. All right. And next, Canberra. Wow, this is a place that haven't been launching for some time until before that was Water Gardens and Commodore. And this land bid also came out very interesting, about 1536 per square feet. Okay, because it's Canberra once again. Location is really, really up north, even further down the Springleaf, the Lentor area. I would say the break even is pretty decent. I would say 1536 per square feet at 10%, 15% over 18 to 19. So it's a 375 units. Okay, and if you look at Canberra area, okay, the last this JR is actually quite deep into the Canberra Avenue area. So this is a place that's not very near MRT, and that's why they actually bid it.
And there are multiple plots around. So I think it kind of fits in with what QF is asking. What's compared to new launch, what is a good resale price gap for safe entry?
Okay.
So I think that's a lot. I think a lot of considerations is needed in this because we realize that last time people always look at per square feet. But I realize that sometimes when, we've seen cases where very big per square feet, but the resale still doesn't do well.
Yes.
Because it's either a layout problem or it's a quantum problem. So of course we don't have time to go to it. But I think in general sense is that don't just look at the per square feet. Quantum and layout is something that you will want to compare also.
Yes.
Sometimes people also look at the facilities in a development. But of course, you really want to dive deep down, right? Do contact us or contact agent, and then we will share with you the resale price gap that we actually done up based on, if let's say 10 years, what should the price gap be? 15 years, what should the price gap be?
Yes.
If the price gap is at this certain percentage, should you then consider the newer launch or should you then consider the resale?
Yes. Okay. And I see one more question. Okay, which is the 2230 per square for 3-bedroom high floor unit non-harmonized landed reserved in your view? Okay, answer later. Okay, let's answer now. In fact, you can see now we have seen all the OCR land bids coming up. This could be 2000. It could be, I would say, average price kind of for OCR. If 2230 actually is slightly on the higher side, and that's something that we need to reconsider. Because if we look at it in the entire inventory, we can find something cheaper and the right PSF, then we may potentially find better, products elsewhere.
Yes, but I don't think it's crazy high because ultimately you're still going for a high floor, right? Again, when we look at different developments, whether it's for a high floor or low floor, there's so much considerations to go into again, depending on the area also, and depending on the jump, whether a lower floor or higher floor makes sense.
Yep, correct. So that's something you need to reanalyze based on your portfolio. All right. Okay, so if you look at back to Canberra Crescent, this GLS, okay, it's currently resale. Okay, in fact, a very new launch that actually came out with Commodore at Water Gardens. Okay, Water Gardens being 448 units, I would say a bigger development, and then Commodore is slightly smaller development at 219 units. So they are really closer to Canberra station as compared to this new launch. You can see the profit that they make. Okay, in terms of Water Gardens,
I think not too bad.
I would say decent. In fact, the 2-bed, 2-bath will make about close to 2 to 300k. I would say 2-bed is quite okay. But then you can see the 2-bed, 1-bath. Okay, 646, 678. Then that's when you can see the
demand is not as high. Correct.
So they make as much as compared to the 2-bed, 2-bath.
Yeah, Commodore, the transactions are a little lesser because they haven't really TOP yet. So the transactions that you are seeing are just sub-sale transactions, which also I would say pretty okay for a development. Usually the jump comes in when they collect the keys because that's when you can move in immediately.
Yeah, only Water Gardens Canberra managed to collect key. Just March this. They actually delivered key way ahead of time. They were very fast. Because the low rise 5-story. So that's something that they actually did. Very interesting. All right. Okay, next we have this development called Derby Residences at Marina View Pro right in front of One Shenton. Yeah, this is really a Marina area in front of Shenton Way MRT. It was built by IOI Property, and in fact, they're going to brand it as a luxury property. A pure lux. So they are going to sell at crazy high price with ultra high lux finishing. Originally, I heard it was supposed to launch at 4,500 per square feet as a luxe property, because the W residence brand, they could combine with hotel. They come together and to rebrand this as a luxury brand. But after that, I think talking to IC, our guest heard there will be about 3.2 to 3.5 per square feet.
Yeah.
But they're going to really ramp up the luxury finishing and make sure that people buy. So it's combined together hotel and commercial. So it's something that is very interesting. But in terms of demand-wise for luxury property, once again, they really have to make big units. Yeah, in order to attract the kind of buyers that you want to get. So that's something that you can stay tuned to look at it. But for us, and for investment-wise, it's really, I would say, not something that we will consider in the launch market. All right, new launch market. All right, and next up, we have
Another
another
CCR.
CCR plot. Okay.
Seems like a lot of CCR is coming up.
Yes. So CCR have been pretty quiet for some time for most of land bids. In fact, the CCR haven't been coming out with a lot of land bids because of the recent ABS-C cooling measure. The land bids of like not doing as well with lack of foreigner coming in. So that's something that the developer are a little more I would say conservative when bidding. And the government, they're also very conservative in launching lands. So with this, I would say this is the year where finally the CC land plots coming up to really set a benchmark for the new
We actually even see like developers bidding the land, planning to launch it and then holding back because they feel like the market demand is not there. And rather than launch it and have nobody buy it, they say, okay, let me wait for the demand to kind of come back, or let me think of how I can repackage it.
Yeah. So maybe perhaps maybe the government come up with easing measure.
Maybe?
It's just maybe for 6 months. No ABS-C. Okay, but I guess with that ABS-C in mind, the CCR market is really being ciphered right now.
Yeah.
Okay, you can see Orchard Boulevard GRS, okay, launching about break even 2,652 per square feet. Actually, break even was 2,838 per square feet. Okay, I would say about 3.1 to 3.3. Yeah, so this is a new benchmark they're setting in the entire Singapore. In fact, for I would say the launches that came out in the past few years, units is about 270 units. Okay, but interestingly, you can see there are quite a few people here who bidded for this land. Okay, particularly UL. Okay, All Green, Wing Tai, and Sustain Land. So they're all well-known developers that actually went for this land plot, and potentially because riding on the wave, that CCR is a little more bearish. They think okay, maybe I can get good price.
Yeah,
and with that, I would say the price I got, I would say is decent. Okay, and one thing that we want to compare to, okay, in this area for this land plot is
Cascaden.
Cascaden
That's
Reserve.
the nearest one, and the one that everybody has been talking about. Was it last year or a year before?
Last year, yes.
Yeah.
So when they say they slash price by close to 20% or fire sale discount.
It was a very huge, I think, very huge drop from the initial people that bought in.
Yes.
It really very happy for those that like bought.
But at the start.
Like a couple months before, and after that, developer decided to slash price.
The 9 owners that bought it. Yeah. So honestly, it's quite a sad thing that happened to them. And this is also, I would say, a boutique development, 192 units.
Yep.
Okay. We have a high rise and 99 year. And when it's slash price, okay, then people say, is it worth a buy? Like, wow, can I buy at discounted 2.9 per square feet? Then it was sold at 70-80%, but not fully sold yet. You can see, even with a slash price, people may not even enter. And one key thing, besides maybe a small development, and also demand of CCR being low, and one thing that's sad to say is actually the layout.
Why they didn't do well. It's also that's why just now we also mentioned that layout is one of the important factors. And for Cascaden, I think they had the idea of building slightly smaller unit types so that people that maybe don't have that budget for a big floor plate likely may buy, but then they kind of forgot that profile of buyers that have the ability to buy in these areas, they have the budget and they prefer like bigger floor plates. So bigger floor plates tend to do better. And one thing about the units here is that the kitchens are open concept. And it's not just a regular open concept. They are smack right in the middle of the living and dining room.
Yes.
So as you cook, all the smell is just like floating behind you.
Yeah, in fact, very interesting. They have one master suite over here and one bedroom over here. It's very side by like quite dumbbell layout, but it's a very unconventional layout where you have your sofa right in front of a kitchen and you can open up to become a massive studio unit.
Yes.
And your sofa will be facing the window lah. So you really have to see the glaring light right in front of you.
That's really the problem with Cascaden and why they actually didn't really perform well. Not just so much on the pricing, but also because of their layout.
Yes, so you really need to be somewhere unique to accept this kind of layout. And for 3-bedroom layout, very interesting. Usually, for a 3-bedroom premium in Orchard area, people value closed concept kitchen. But over here, you have open concept. And same thing, they decide to, maybe they really love to merge the living and the kitchen together. Your open concept right in front of your sofa and bedroom. So this once again create a very, I would say, unconventional layout. And that, of course, if you look at your own stay for long term, then okay, price seems okay. But if you purely talk about the kind of layout, this is something that I would say it is not as ideal when it comes to CCR market.
For
Cascaded.
Okay.
All right.
So next launch that we have coming up is, we can say this as a Parktown 2.0. It's not really, it's similar. It's also integrated, but instead of Tampines now, it's going to be at Tampines West. So this is that Tampines Street 94 GLS, and it's going to be a mixed development of 585 units. So their break-even price, if you were to take it from here, is about 1,008. But then if you watched our previous videos, you'll realize that this is not really the actual break-even, because you'll see that I think for Parktown, they mentioned that their break-even was 1,006. But then and people say, 1,006, maybe they'll launch about 2,000. But in fact, they launched about 2.3 to about 2.4.
Yes. And so why they launched at 2.324? If you look at Parktown, indicating price, okay, on average, about 2.369 per square feet, up to even 2.6 per square feet. Although their break even is 1.661. Okay, if you recap, there's only run through a quick one based on what I mentioned in the previous video. A lot of people look at this based on what people have mentioned on YouTube, like 161 per square. Oh, we will launch at 1,008, 1,009. But actually before that, we did actually predict that it will not launch cheap, because what you have to do, okay, when you look at development that are not pure residential, there's a commercial residential component. You have to factor in the fact that the commercial component cannot be sold.
Yeah.
So commercial component have to be, usually capital land or big developer will manage it.
It's like they have a cost to it.
They have a cost to it. So they will end up managing it instead of selling it. Two reasons in particular. One is, if you were to sell it in the market, there's no demand for retail shops. I mean, in the market, you can see like Midtown residents in Hougang area. Like one Sophia recently, there's a commercial that no one is buying. The demand for this in the retail market is not high. So they know it doesn't make sense. Second thing is, if they want to make the entire place more livable, more, I would say, presentable, they will not sell retail shop. They will actually manage to sell to make sure that the entire facade, the entire retail, the experience of staying there will be pleasant. And that's when they will actually do that. And you can see, example, like One Holland residents, Holland Village residents, you have Reserve residences also doing the same thing. So if this in mind, the commercial portion, the area, you can see over here for Parktown, you have areas like commercial, shopping mall, you have bus interchange, community use, hawker food center. It will not be sold. It will be managed by developer and then rented out for a rental use. So the only sellable area is actually the residential component, which in this case, instead of the 126,000 square meter quoted in a lot of video, a lot of other, I would say, data over here, we give you 161 per square feet. Okay, it's not an accurate number you should look at. You should look at the 108,000 square meter, which is sellable. I would say sellable residential component. So you take the total cost divided by this area, the actual break-even is 1,931 per square feet. And if factor in a 7% area harmonization, 2,066 per square feet, and add a 10% profit margin, they'll give you about 2,273 per square feet. And that's why they launch higher at about 2,223 and up to even 2,500.
Yes.
So this is something that you have to factor in when it comes to looking at especially mixed development or commercial component, development commercial component.
Yeah.
And this is why at the end of the day, you look at the final launch price, which is something that we tend to catch this PSA before they launch, is because from that, you can spot good deals that is potentially selling like 20-30% below this value, or other places where there could be a lower price, entry price to consider. And with Parktown, in the end, you can see on average 2.3, 2.4, 2.5, with the compact bedroom going about 2.2 million, the big 4-bedder going even 3.5 million. Okay, then you can see the premium layout going 2.445 million. Okay, and closer RCR prices. Okay, even the 1-bedder over here. Okay, they're also going at close to, I would say, 1.345 million.
Yeah.
Which you can potentially find better deals elsewhere. And with this, Parktown residents, okay, sold about 88%. Which is interesting. The demand for a mixed is really crazy.
Yeah.
Right. And with this, okay, let's put this lens, I mean the lens we learned from Parktown, to Tampines West. If you do the same homework, okay, you must understand that in this...
You don't have to do it. Chris has done it for you.
Okay, I've done it. Okay, so I'll share the final answer. Okay, is that commercial segment is about 10,500 square meter. So this is the part that can be sold.
Yeah.
And if you minus this off, the resident component is only 51,314 square meter. So you do all the numbers, same thing. The launch price, okay, break even about 2,349 per square feet. Average price, I would say 2.425 up to even 2.6 or even 2.7. Yeah. So it's something that once again set
Which
a new benchmark.
say it's crazy, right? Like why would OCR actually hit these prices? But then you see like OCR in Alta actually like hitting this kind of prices already. So I think this is something that is coming up. These are like future pricings that we would have to accept.
Yes. All right. Yeah.
Okay, so for those of you who just joined us, right, we're actually going through the new launches that's coming up for 2025, first half as well as second half. If you missed the front part, do contact us as we have the whole guide that we can also send you on the whole list of what's coming up also.
All right, yes.
Okay, so let's move on to the next one. The next one will be at Zion Road, Parcel A. So it's again, we realized that now there's a lot of Parcel A, B, C. So
Yes.
I think developers are a little bit more conservative. They tend not to take up too big of a plot because the risk is slightly on a higher end. So then government kind of say, okay, then let me break it down for you into like different plots. So it's a little bit special for this plot. It's going to have 740 residential, and then there is a 290 service apartments. And these are not just regular service apartment, it's a long-term service apartment.
Yes.
So it's a new pilot program, I would say, and that's why you will see that nobody really bidded for this land.
Yes, only CDL, because CDL actually manage hotels, yeah, so they made a hotel
they're the one with the
experience.
courage to actually try out something new.
Yes, and I guess they got a bid because they feel like, okay, I can try it.
Correct.
Yeah. And in fact, this service apartment is a little special. It's not the usual service apartment where you can stay at 7 days.
7 days,
You
yeah.
need a minimum 3 months stay. So it's very a new concept. So when new concept come out, developer are a little
It's a
more
bit scary because you don't know
scary,
you don't know how I would say how the market is going to react to this kind of
Like-
a long-term service apartment. So it's like really
Yes.
a bet. And when you take a bet, right, you have to minimize your cost. That's why sometimes
Yes.
they cannot bid too high for these lands
Yeah,
also.
or they don't even want to bid. Yeah.
Correct.
Yeah,
Yeah.
so there's something that we noticed for this kind of new plots. And in fact, you
It's
look
not the
at-
only plot.
Not the only plot.
Yeah.
In fact, there's one plot that came out at Upper Thomson. Okay, at Parcel A, with the first one that launched.
So just now we say why only Parcel B started, where's Parcel A, right? Yeah,
Yes.
Parcel A, there's nobody that bidded for it.
Yes, because it came with a new concept and people said, wow, if it's CBD, like River Valley, people say, okay, maybe there's still a demand. Service apartment because people expats are renting there. Then for Springleaf, people were like, rent there.
Rent the short term.
Short term.
It's not the
Yeah.
most conventional places where people will rent short term. Because normally short term, it could be like expats who are here for a while. They may rent short term, right? So
Yes.
it's really a whole new concept for developers.
Because in Springleaf, there's only shop houses, there's
Prata.
nature, and Spring is Prata, the favorite, and there's something else. So there's something that developers are totally not going to beat it because it's not even worth the risk.
Yep.
So there's something to take note. Okay, but with this, very interesting, this Zion Parcel A, okay, same thing. Okay, if you have a commercial component or service apartment component or something that cannot be sold, so service apartment can only be rented out, it can't be sold, you have to factor that out along with the other commercial component or even this early child development center, which cannot be sold. So the actual residential area for sale is only 63,461 square meter. So you add that in, okay, the actual break even is about 2,819. At area harmonization, about 3,000 per square feet, which means at a 10% profit margin, about 3,318 per square feet. So people who are thinking, wow, it's so cheap, let's wait for the bid. There's something, it may seem cheap on the actual break-even price.
It's like a part-time break-even.
Down break-even, but
It's a fake break-even.
fake break-even. Yeah, so there's something that is a little misleading if you see this online, but it's kidding is to be able to factor in. But of course, driver may want to launch it cheap because once again, it's a CCR. They may want to factor in. So they may launch it closer to break-even or slightly below to actually entice people to buy.
Yep. Okay, so after A, of course, then we have Parcel B. So we have also Zion Road, Parcel B. Break even is about 2,229. This one is going to be a purely residential, so the 610 units. There is no service apartment, long-term service apartment component to this one. And that's why you see, okay, slightly more bids, 2 bids rather than 1 bid. And the land rate is actually about 8.49% higher than Parcel A. And this is also due to the absence of the service apartment where, they so when I think you can see it as, if there's no service apartment, it's more like flipping. I clear out my units, I get my financials, my cash flow, and then I buy another one for flipping. But when you have a service apartment, my cash flow is being tied up, I can't sell that component, and I have to kind of like milk the rental in a certain aspect.
Yes.
Yeah.
And that's why if you look at the break-even price, it's surprisingly low. In fact, I would say as compared to like the similarly low for Parcel A. Okay,
Yeah.
this is slightly higher, but even with factor, it's a pure residential.
Yeah.
So add a 10% profit margin, 20% profit margin, I would say about 2,728. And that's something that potentially it could be launching or it could be going higher if Parcel A actually do well.
Yeah.
So that's currently the new launch price in the CCR market currently. Alright, so next up, the last plot, CCR plot that is coming out this
A lot of
year.
CCR this year, really.
Yes, I guess setting a new benchmark and holding firm at 3,000. We have Holland Drive residences. Okay, this plot once again is interestingly low. It's thank God it's a residential, so you don't have to do the prorated KSF. 2203 per square feet. Okay, if you look at a 15% profit margin, it's about 2728. I would say it's pretty decent. Okay, that they may launch it on I would say about 2829 kind of per square feet if you run a follow CCR, but they can afford to launch about 2728 even if you want to. Okay, and you can look at in this area. Okay, there are 3 developers: Holy Development, Interpret, and Japura Development Private Limited.
So Holy is also known as Capital Land, basically.
Correct. So they actually managed to get this land plot, and right beside this under area, we have the Holland Village residence that actually came out. So there's something that is very fully sold, up to date. So there's something that are benchmarking against, and potentially if they launch it cheap, there's something that we will foresee that the price may go. As well, Holland Village is a much more interesting location as compared to Marina area.
Yeah, so I think these are the upcoming plots. I know there are a lot of other like smaller boutique ones, but I think these are the main ones that are not like 20, 40 units. These are the at least 200 units, right? And these are the ones that will be coming up for 2025. So we'll be taking a short break, maybe a 5 minutes break, and then we'll come back. And during the second session, what we'll go through is land bids that have been bidded in 2025. So all these that we have shared, the land bids were bidded last year in 2024, and then this year they're launching. But what we want to see is, let's say 2026 moving forward, what are some of the things that are coming up? What are their potential locations and maybe the prices also?
Yes, and with the prices, we can see whether, 2025, we enter right now, what is the future price that if you wait, what will we be getting in the future? And with that, we set a new benchmark in the market. And from there, we are able to make a more informed choice to see whether this project is worth considering.
Yeah. So we'll see those that have closed for, that means have been awarded. We'll look at those that are open for tender at the moment. We'll look at those that are upcoming for tender and also on the reserve list.
Yes. And last but not least, we're also sharing investment strategy about how exactly do we invest in property today. Okay, what is the strategy that we use? And in fact, this is very fresh. Just like 2 months ago, in fact, just 4 months ago, we bought another property. And this is a way that we have been investing consistently for a lot of our investors, even for ourselves. And also we're sharing, I haven't shared this, in fact, on public before. Very nervous, but my whole journey of how I started from 0 property and how did I slowly go to 9 properties up to date. And from here, I'll be sharing the hard truth of why I came to real estate investment in the first place.
Yep, so stay tuned and we'll see you in a while.
Welcome back to part 2 of our investment summit. Okay, so as usual, you like to find out more about real estate investment, okay, do scan the QR code on the screen right now, and I'm more than happy to share with you how do we invest in property in this season of the market.
Yep. So in the first part of our live, right, what we shared was, the upcoming launches in 2025. So, you happen to miss it, don't worry, just reach out to us through the QR code or reach out to the broker that actually invited you, and then we'll send you the copy so you know what's upcoming. So in part 2, what we'll do is we'll go through some of the land bids that have already been bidded, something exciting, but these will be in 2026. So it's really just to give you first tips on, after 2025, where's the market heading, what are some of the land plots or what are some of the new launches that's coming up also.
Yep. Okay. And most importantly, even 2027, it could be even like a price that will be setting a new benchmark in the OCR market.
Correct. So it means let's say now you haven't reached a 3-year SSD and you're planning ahead, right? Yeah, these are some of the plots that you may be able to consider.
Yes. All right. So first up, we have this condo called at Tangan Garden, okay, at Tengah area, which is, I would say, a new area. Okay. In fact,
it's the first plot.
First plot.
Yeah.
Okay. And they bidded at about 1575 per square feet. I would guess it will be very early 2026, okay, launching at likely about 2022 per square feet.
Yes.
Yeah.
And I think for this plot itself, it's going to be near the Hong Kah MRT. So it's the extension of the Jurong line, right? And then, of course, what people are looking at is ACS. Because AC is shifting to Tengah, but unfortunately, it's not within the 1 km. Like, it's slightly outside 1 km.
And if you look at this, developer once again, it's GoCoLand. They are really being very aggressive OCR plots, and they have succeeded in Lentor, so they want to replicate the same concept. Okay, and if you look at the next one, okay, the next plot we have
another
here,
dairy farm. So we had dairy farm residences, we have botany at dairy farm, and there's another dairy farm plot that's coming up.
So you can see the developer are quite confident in this area because dairy farm and botany is 100% sold out.
Yes.
So they know that, okay, if there has demand here, let's try again for this. And if you look at the break even, it's about 1844 per square feet. Launching price, it will likely be 22 to 23. So this will really start to set a new benchmark for OCR market.
Correct.
Okay.
I think one of the things that we notice about this area, right, if you have to go and see, is that there aren't many bigger unit types transaction like three raiders. But it's not because there aren't many people selling. There are listings that are on the market that owners are looking to sell off. But the take-up rate is just not very strong in the secondary market for some reason.
Yes. And if you look at this government sale, upcoming there will be another 2 to 3 more plots around the area with future development. So these are the condo plots that
you'll see like future development.
Yeah, so they are hoping to use it to set a high benchmark. And that's what the government do in order to make sure the price keep going up.
So we have one coming out at Dairy Farm Walk, and then the next one we have, it's River Valley Green Parcel B. So we talk about Zion Road A and B, right? They are pretty close around each other.
Yes.
So River Valley, we're going to have 3 parcels, A, B, as well as C. So this one is B, and it's going to be the one that it's a little bit more expensive because in terms of view-wise, they're going to get slightly better views than A as well as C. But all 3 are near the Great Wall City MRT.
Yes, so it's just setting the benchmark. If you're looking at the plots, I would say Zion Parcel B will be something very interesting to consider in these 3 plots. And these are setting a new benchmark for the subsequent plots.
Correct.
Okay.
So one thing you want to know about this area, right, is that there is going to be quite a bit of supply that it's coming up because there is so many plots. So there is, I think, A, B, C, and then Zion Road, there is 2 more. So in total, there are going to be 5 plots. Yeah, so there's going to be potentially 1 more coming up. So these are the total number of units that you're going to be having. All of them are mostly just the normal residential plot, except Zion Road Parcel A, which we mentioned a little bit just now. A is going to be the one with the mix of residential plus the long-term service apartments.
Yes, and if you know the land bits they are bid at, the key thing is if you buy at the right price. Okay, the good news is you have more land bits hedge against. Okay, that's good news. Awareness of course, more supply coming in, but the key thing you need to trace is not just about supply. You see, is there a demand for this kind of unit? So that's where we trace the demand supply analysis to see whether this kind of plots can be entered.
Yep.
All right.
Okay, so next plot we have coming up is Media Circle, Parcel A.
Yes.
So Bloomsbury is coming up. So this is not Bloomsbury. This is Parcel A. And then, of course, again, there is Parcel B. So this one has already been...
successfully bidded.
Yeah, successfully bidded already. And Parcel B wasn't successful, firstly because it was a very special plot again. Again, the government is kind of experimenting with a 60-year lease, not a 99 years.
Yes.
It's a 60-year lease, and then again, there is a service apartment component in it. So that bid didn't really go through also.
Yeah. You can see if service apartment is getting increased popularity in the actual freehold market. People are buying over buildings to reconstruct service apartment, buying hotel, buying residential, and then converting and get approved for service apartment. It is something that the government is doing behind the scene.
Yeah.
Because they notice that likelihood they are bringing in more people into Singapore and they need short-term stay places that can service this kind of rental. And from there, that's why they are launching this new scheme to accommodate this group of people who are coming in. And very interesting for this, back to this Media Circle area, although it failed, because it's a new concept, people haven't tried this before, they have no benchmark to hedge against. Okay, it failed, but no worries, we have looking at more residential. This is something that I would say is a norm. Okay, Parcel A, but one thing to note is this land plot, the break even, it's actually cheaper than Bloomsbury.
Yep.
And there's people I said, oh dear, it's cheaper. Would they launch cheaper than Bloomsbury? Okay, but the key thing over here is that
Same developer.
Okay, this is very important because if both are same developer, Qingjian and Qingjian, both are Bloomsbury. Once again, they have the power to hold the price or even raise the price, and profit margin percentage does not determine what's the price at launch.
Correct. It's like Lentor area, right? Guoco, they basically took monopoly. So even though like Lentor Mansion plot was slightly lower, they didn't really launch Lentor Mansion plot or the prices low because they cannot kind of affect the previous launches also. So it's good that an area, especially when there are multiple plots, are being taken by one developer so that they kind of have control over the pricing so that they don't sabotage the other plots also.
Yes. All right. And this is the most important plot that came out just 2 days ago.
Bayshore Road, something that people has been looking at.
Yeah, and very interesting because this plot, it has set a new benchmark for OCR market today.
Correct.
And new township, 2343 per square feet break even. At a 7% break even margin, about 2.5. 10%, 2.7, 2.8, I would say maybe about 2.8. Because they say sea view, nice.
Yeah.
It's like more French OCR, RCR.
And they know the demand over here is strong because there hasn't been like a newer condo in quite some time.
Yeah, for almost 30 years. So they actually bid this plot and they're very confident to actually buy Singai. Okay, Singai is very iconic for being this kind of high demand plots and being very bullish about it and selling later on and knowing that hey, they have the brand to sell to China buyers or their own profile. And this in fact hitting 2728 is something that you have to take note because this will be the new benchmark of OCR.
Because Alta, in fact, for some of the higher floor levels, right, they actually did hit 28 already in OCR.
Yes.
So this is just like the new prices that we are seeing in the market. This is really the new high. I would say that they broke a record for bidding such a high price for OCR plot. But of course, again, Bayshore being like quite a different OCR where the demand is relatively high.
Yes.
That's why you see the HDB prices that they sell here for the BTO is not the same as other areas also.
And most likely it could be a PLH model. In fact, you can see this entire, there'll be a new township coming up in Bayshore area. Next to the sea, next by coastal Desor and Bayshore Park, okay, the entire township with the new BTO coming up.
Yep.
Okay, it creates a entire new vibe, especially when it's next to the sea. And people love East Coast, and this is, I would say, extension of another East Coast. So the price here will launch won't be cheap, and there's also another 2 or 3 more plots come out in the area that potentially has a mixed D, potentially another benchmark, and this is something that you have to take note because it will really set a new pricing in the entire OCR market.
Yeah.
Right.
Okay, so I think that is the plots that our launch have been bidded, have been sold. The next thing that we'll move on to are land plots that are in the confirmed list. You know, they're in the pipeline and they're now open for tender. Means developers can actually bid for it.
Yes. All right. So if you look at this, in terms what's different in confirmed list and reserve list?
Yeah.
Confirmed lists are those that already launched in the market, okay?
Yes.
And they are in the pipeline to be sold. Okay, and then we have another side called reserve list. Reserve list is just, okay, they are still in the midst of tendering, some may not even launch because if they realize that, hey, here no demand.
Developer didn't apply for it, right? Then they will not launch it. So they will go under the reserve list first. They say, okay, developers, if you're interested, please apply for this. And when they will see what's the interest, right, then they say, okay, should I put it up to the confirmed list or not?
Yes, all right. So with this, let's iron out common list. Not many. I would say 5. Okay, this 5 is the one that we'll be looking at. Okay, Media Circle, Lentor Garden, Chuang Grove, Holland Link, and Chenchua Close, which is all at Khatib. Okay, so let's run through the first one. First up, we have Media Circle Parcel B. So after the previous one failed, the other Media Circle failed, they realized, okay, let's not launch something that is out of the market anymore, something that is not tested in the market, service apartment. So they decided once again launch the last plot as a residential plot. So there'll be about 500 units coming up, okay, and inclusive of a commercial space, okay, of 400 square meter, okay. And in terms of this land plot, you can see it's right next to Bloomsbury, this entire enclave.
There's a lot of plots that are lone residential, and a lot that are still subjected to detailed planning. So I think the government has because at this moment now there is not really a residential area. There's like Media Corp is there. Your One North, your Fusionopolis is all there, right? All your research hubs. So they're trying to really transform this area with all these plots.
Yeah. So of course, if you look at this kind of plot, potentially it could be a longer term hold because some of the transformation is announced but not fully effected. Maybe only until like subject to plan can be 5, 8 or even 10 years. So it's something that is a long term perspective that we will be looking at this area. Right? And next up, we have Chenchua Close. For us, I thought it was somewhere at Bukit Timah, but no, it's actually at Khatib. With a very nice name. It used to be a farmland, okay, and sadly it was closed down because government need more land in Singapore. And they took back the land and decided to relaunch it into I would say 5 plots are residential, but currently only 1 is launched. Okay, so this is the first plot. The government really love to do this because they will usually launch the mixed development first. Whereas that's the one that draw the attention. A new township like Lentor Modern, like we see areas that have a new development coming out. It's always the mixed D first, like Parktown. Okay, then they start launching the residential at the side. Okay, and fun fact, where is it? It's actually located next to Khatib MRT. Okay, cut through the HDB, maybe about 6-7 minutes walk. Okay, into this integrated development. Okay, so let's see how it performs. And this will potentially once again set another benchmark of the OCR market.
Yeah. Right. So the next one we have another Lentor plot. So Lentor has a lot of plots, and this is the next one.
It's the last plot.
Yeah, the last plot, right? Before all the one, there are other plots but they are the shorter ones, 1.4, meaning they won't be as tall. They are like 5 stories high. So this is going to be the last plot. And Lentor Central did really well. So we will see, likely Guoco is going to be trying, or Hong Kong is going to be trying for this plot also, I believe so. So we'll see how this goes also.
Yeah, and potentially because RDYC, most Lentor area almost like 90+% sold out.
Yeah.
So if you're like, okay, maybe I have more confidence right now, it's not like I would say a plot that, and this is the last plot, so there's no more plot that's coming out in the area, okay, for up to the next 2 to 3 years. So potentially there will be someone who is willing to bid even higher. So let's see how this goes. Yeah. And in fact, okay, the next plot we have, okay, very interesting, is Chuang Grove. Okay, so Chuan Grove by itself is the next Chuan Park. Okay, but
Chuan 2.0.
2.0, Chuan Park 2.0. But instead of Chuan Park going through en bloc, we have a government land sale coming. And potentially, if they were to be very, I would say conservative to launch, they may be launching at a cheaper price, potentially.
Because it's not as near.
Not as near, correct. And in this land plot that we are buying right now, right, because it's government land sale, and the development is seeing that Chuan Park is doing very well. Wow, 80%. So PSF hit record high 2827 for OCR region. What you may see is you have a competitive bid. And that potential once again set another benchmark for OCR region. Okay. And if you look at Chuan Grove area, it's actually right beside New Tech Park. Okay, further away from MRT, definitely about 6-7 minutes walk. But of course, let's see how it goes because the tender is going close very soon. And from there, we can determine whether this land plot can be the next Chuan Park.
Correct. So you'll notice that for this big plot, right, the adjacent plot is also going, it's not open for tender at the moment. They'll probably see how this one goes. But it's actually in the pipeline later on in this year to be launched for tender also.
Yeah, under the reserve side. Okay. Then last but not least, we have this land block called Holland Link.
Yep.
So Holland Link is actually very deep into Holland area. I still remember last time we used to be there door knocking for even like GCB listings. This is an area where landed listings in the Holland area, and it's all Holland Road. And this place, if you know, the recent development that really went viral on internet was basically a strata development nearby. Okay.
Also fire sale.
Okay. 99 years strata landed.
Thanks,
and
Fabian. Fabian say love it.
Yes, okay. So with this land plot actually coming in, okay, it's actually very deep in, not near MRT, and about 230 units has come out in this area. Yeah. So with this, it has I would say a charm in terms of being very deep in for Holland area. So people love Holland like this, but if people like convenience near MRT, this is really, really quite out of the way. About close to 15 minutes bus ride, in fact. And we look at the area itself, okay, this is the first plot coming up.
It's like, so in a way, it's like a first mover advantage because there's like the whole plot that has already been zoned and cut out already. It's just that this is the first one. And then you can see that there's 1, 2, 3, 4, 5, 6, 7, 8 plots in total.
8 plots, yeah. So it's really creating a new, I would say, benchmark. Another lentor, but in the Holland area.
But what things to note is also that they won't be very tall buildings, like because the plot ratio here is only about 1.4. 1.4,
correct. Because it's near landed enclave. Alright, so we have the overview of what is bidding right now.
Yes, what is bidding right now. So developers can actually bid for all these plots of land.
Okay, and with that, let's move on to the last part, which is, this is a very brief summary. Then we have the next reserve list pipeline coming, okay, for tender.
Yes.
Okay, and these are all the pipeline, okay, because of time, okay, what we'll do is we'll be running through very quickly all the plots and where they are, okay, not going too in-depth. Okay, so this confirmed list has come out. We have Seja Close, EC, Woodlands Drive EC, Lakeside, Dunyan Road, Chuan Grove, okay, is the next plot, Sembawang Road, Albert Thompson, Dorset Road, Telok Blangah Road, and last way, Hougang Central.
Yes.
Okay, so let's see how they are faring. Okay, first up, EC. Okay, so EC has always been a very hot development that people are looking at.
Yeah.
Okay, and what we see for this EC, Senja Close, is right next to the KP.
Yeah, there's a lot of HDBs around it. And I know when we looked at the Google Earth, something like interesting that we found is like there is this, I don't know what you call it.
A quarry, like a hidden quarry that we didn't know until we saw this.
Yeah, I said, can drive inside to see, and I didn't realize it cannot because the land kind of ends there. So I thought it would be an adventure to kind of go in and see what's in there.
Oh yeah, so it's very interesting. So always seeing this quarry, which is elevated plot right in front of the quarry. And look at this entire area. It's actually near to Bukit Panjang, but not near also. But it's all within all the new BTOs that came out in that area. Okay, so there's the first plot. Okay, so run through quickly. Second is Woodlands, another EC.
Next to Norwood.
There's Norwood.
There's an EC that's coming
There's a
up.
Woodlands South MRT. And if you look at this, Norwood was launched right this year, about close to 80+%. So pretty hot development. And then this is the EC that's come right in front.
Near to Woodlands South MRT also.
Right.
And I think it's something special because not a lot of ECs are near the MRT.
Yes, okay. And also next to the hospital campus that actually came out in Woodlands area.
Yeah, so I think most of the ECs in Woodlands are not near the MRT, like Twin Fountains, you have Forestville, Bellwoods, these are towards, they're not walkable to MRT basically. Even I think if you want to walk, it's like a 15-20 minutes walk. Yeah.
It's a pretty far walk in. Okay, and next up, we also have Lakeside Drive. This is actually right next to Lakeside MRT. Okay, but once again, because it's a mixed D, likelihood it won't be cheap. Okay, and set a benchmark of the OCR area once again. Okay,
Yeah.
potentially it may be another Bayshore. Okay, Bayshore land plot. Number of unit is about 575 using it. So okay, commercial space about 1,000.
Yep.
Okay.
So the other, plot launches that you would have heard in this area is like Lake Gardens. I think it's about 70% sold. Sora about 40+% sold. But these two plots are not near the MRT. Whereas for this new upcoming ones, they will likely set the new benchmark also, because generally once you're near MRT, usually the prices are slightly higher.
Yeah. Okay. All right. So next one, Dunyan Road. Okay, this is in 6th Avenue. Okay, launch is next month, April. Okay, and this plot, in fact, if you look at it, is right next to the Bukit Timah Road, the very busy road. Okay, the last one that came out was this two plot, one government land sale by government. It used to be a fire station, now converted into 4th Avenue residences next to MRT. And another plot that went through the en bloc, okay, Royal Green, a freehold plot right opposite it. So this is setting likelihood another new benchmark in the area. Royal 4th Avenue used to be about 2.3, 2.4, and then now it's about maybe 2.8. 2728, and this once again was set with 3,000 as usual for the for CCR land.
And you also see that next to it, there's another commercial resi plot that's also coming up at with a plot ratio of 1.6.
Yes. Okay.
Okay, next one is Chuan 3.0 this time.
3.0.
So 2.0 is open for tender right now. Again, after that is done, there is going to be another one that is going to be launching in May this year.
And literally, the plot ratio is literally 3.0.
Oh, yeah.
So like plot ratio is how high you can build. 505 units, and there's something that potentially once again, if it's hot, we set another benchmark in the area.
Yep. Okay, next one we have another EC. This is near Sembawang Road. So it's going to be about 265 units.
Yes. Okay. And this area, if you know, is actually near to Water Gardens, the Canberra area. Very deep in. Okay, so EC, one thing in common is really they try to set it places that are a bit further in.
Usually they are at the not the most ideal locations. Yeah.
And why EC they are more than happy to take this plot because they can buy land side cheaper.
Yeah.
And it's they launch cheap, and the natural demand is always there. So the government is more than happy to launch somewhere that is right out of the way rather than somewhere that is near the
because
MRT.
they know it's like confirm got people buy.
Yes, correct. All right. Okay. Then the
next
government
one
decided to change their mind.
Yeah, Parcel A.
Thompson. Yeah.
Yes.
Parcel A. So it used to be one with service apartment.
Correct. Then nobody wants it, right? So government said, okay, let me just change it for you guys. And now it's just purely residential.
Yeah, with commercial and first story. So there's something that we ran for Springleaf, hedging for Parcel B. Okay, which is interesting. Actually, Parcel A launched with Parcel B, but now it's a reverse. And this was set a benchmark and launched this year in June 2025 for developer to
Correct. So if you will see the news that it's not even like one person bid and like the bid is low. It's like nobody even tried to bid for this plot of land. So the government said, okay, it means that there is no demand for service apartment here, right? So from the 540 resi and 100 service apartment initial requirement, they actually changed it to then about in a total of 595 purely residential.
Yes. Okay. All right. And we have something very interesting at Dorset Road. Okay, right in the Oxford Road in our CCR area. Okay, so you can see this plot is about 430 housing units. I would say a mid-sized plot, and actually near to all the Catfish Green, Kensington Court, Kensington Catfish Lodge. All these are one that they rumored have en bloc, but at the end of the day, because the land plots in the demand in the area and Rangoon Lane actually closer to that of Little India area. So in terms of this entire zone by itself, the association towards Orchard or CCR is not as high. So it is something that may be launching in this area in June 2025 for developer bid for.
Yeah.
All right. And okay, one more thing before I move on to Telok Blangah. In fact, in Dorset area, to look at whether a place can en bloc or not is something very important. Is to look at other governments coming out. If there are governments coming out, one tip that we have for people who look at even en bloc property, right? Chances en bloc will get less because developers tend to want to bid for plain land. They don't need to go and go through the whole process.
Of having to go through en bloc, getting the owners to say okay, and they have to. I think it's not as straightforward because there's a lot of demolishing work that has to be done also.
Yes, correct, and they have to really appease the owners who usually want to have a very high price.
Yes.
And why not just beat the land and then just get it for so that's why in Lentor area there are other plots that are very old, let's wait for en bloc, but it never happens because owner want high price, developer want low price and never meet. So that's something you have to reassess again. Okay. And next up, very interesting, Telok Blangah Road. Okay. Haven't been a launch coming up for some time. Last time it came out was about 3 years ago. This case Reef at King's Dock. It's a very harbourfront area. And this particular land plot is a new plot, 740 units, actually in front of the Keppel Golf Course. Okay, it used to be the Marina Golf Course, very nice place, but the government took back the land, decided to launch BTO and also private, which in this case we have this particular Telok Blangah Road. Okay, 740 units. Okay.
And then the last one that we have is at Hougang Central. So I think this is going to be something interesting because along the Hougang MRT, right, there are multiple plots, not just this plot alone, right? And this is something that's coming up. It's going to be private that is on top of the MRT. And this is not the only plot because you would see that there's another 2 other plots that is coming up also. There are no immediate news yet, but it's going to really feed the demand in the Hougang area for private residential.
Yes. In fact, number of units, 835 units, I would say a decent size. Likelihood, another Parktown. Or another Tampines West, another Bayshore. Yep. And you can see you wait for another 2 more years, 3 more years. Likelihood, this will once again set
not gonna be cheap.
Another benchmark. And so this is something that I guess is good news. I mean, for those who bought into OCR market right now, if you enter at a certain entry price, you know that these land plots are coming up to set a higher benchmark in the next market.
Yes.
In the next tranche, that's when you can be able to hedge this price to have the profit gain. And notice that, as usual, it's very similar to Lentor area, similar to what you see last time.
Break up the plots of land. There's 2 more other assets coming up also.
Yes, 2 more other residential sites, which once again, that will be 4-5 years later, set another benchmark in the area. So government is always planning this. They say they want to make sure that the next land plot is always higher, such that it can always push out the price in the long term run. And this helps to drive the market. And as long as the Singapore property bubble is actually quite low and people can afford to pay for the property.
Yeah.
Right?
So the next thing we'll look at is reserve list. So we won't necessarily go through each and every because it's still under reserve. So nothing much is firm up yet. But basically, there are Marina Gardens Lane, 390 units. You have Holland Plain, which is the one next to
Road.
Correct.
Yeah.
And then we have Media Circle, another Media Circle coming out. So you realize that when governments actually launch an area, it's usually one area, and then they'll slowly launch the plots, just like a Lentor. And that's what they're doing for Springleaf side. That's what they're doing for Media Circle side. That's what they're doing for Holland Plain side also.
Yes.
Then as well as the River Valley side. Because you have A, B, and now you have C coming up.
Yep.
Then for white sites, which also could be residential, is Marina Gardens Crescent. You have Jurong Lake District, which is the one at Jurong East. People actually, the developers actually bidded for it before, but too low. Government saying, nope, not going to sell it to you. So they didn't go through. So now it's up for bidding again, or rather in the reserve list. So they're trying to see any application or not. What are the prices that developers looking at? If they hit a certain price and say, okay, now just put it up to the confirmed list.
Yes.
Then last one, you have Woodlands Avenue 2 also.
Yeah. Okay, so with this 3,400 units, so government will want to wait for the confirmed list to be clear, maybe for 1.5 year, 2 years time, and launch this. So this is something government is always planning, so that there is no oversupply in the market. All right. So with this, we come to the
There's a lots of land
plans,
that is in the pipeline to actually launch. I hope it gives you an idea on what to expect. Moving into 2025, even moving into 2026 or 2027.
Yes.
Because you don't have to wait till then, because you can kind of have an outline on what is coming up already.
And with the new land bids at Bayshore today, 2 days ago, this is really something that really shocked me, but at the same time, it's expected.
Shocked but not shocked.
Not shocked, yeah. Shocked but not shocked, because it was like, hey, a new benchmark, but the prices are getting higher.
As I expected,
than expected. And that's something that the government always is looking in the pipeline, such that people are able to hedge the price and allow it to grow in the long term run. Okay. So with this, we come to the last part, which is the most important part. Okay. What exactly is our investment strategy in this season? What is something that we are doing right now for our clients and for ourselves even, that allow us to be in the market to make sure that we buy the right property? Yeah, so our investment team, have currently owned about close to 25 million assets, under 30. Okay, so today we'll be sharing, my story and also a Grace story. So yes, Grace, maybe you can start sharing first.
So I think before we even move on to Chris, right? Personally, I bought into a 4-bedder at Lentor Mansion, and some of the reasons why we looked back at that time, right, is because when we talked about the price gap, we realized that in this area itself, the price gap at Lentor versus the surrounding resale wasn't the biggest, such that if you look at the 10-year-old age gap development, their 4-bedder was about 2.62. So if you enter into something brand new, they had the 1 km to 600 set next, and I knew that 4-bedders generally for own stake. So when I want to exit, I wouldn't have to compete with too many sellers at that time.
Yes.
Yeah.
So very little supply but high demand. Yeah. And in fact, you can see over here that what Grace mentioned, like the resale in the area, like Panorama. Okay, that's something that we've been analyzing consistently with a lot of launches that consider as a decent buy, is when the resale price and the new launch price almost similar.
Which is usually quite unlikely in the market. Usually there is some sort of gap. Yeah.
Yeah. But in this case, one of Panorama is about 2.62 million. You can buy something that is brand new, that is a 10 years newer at about 2.6, 2.7. So that's when we were able to hedge its price to find the right property to invest.
Correct. And I think QF has a question. Is it worth to look at post-launch projects then still got it? I think it's something that, new launch, there's always an element of luck. So, and new launches are sometimes overhyped to a certain extent, because everybody just like the buzz and the hype of going for balloting. But again, it's always down to luck that oftentimes, even a lot of our past clients, they manage to enter into a post-launch project where, the hype is no longer there, but the entry price will make sense. It's just that nobody is really looking at it because there is no hype. Like everybody feel like, I've missed the first mover advantage. I want something that is brand new, and everybody go hype it at a brand new development, right? So definitely there are still units left in the post-launch inventory. And if you do want to find out, let us know what your portfolio is so we can relook in the market for you also.
Yes, and in fact, sometimes for hype projects, because it's so hype, people end up buying the wrong price. And that's something that we also have this walk-away price.
Because everybody go there, right? Then it's like balloting and it's all fine.
It's all fine, yeah.
And if let's say prices are all gone, and then you feel like it's so wasted because you're already there, and if prices try and go up 4 or 5 times.
Yes.
We see even people at 12 a.m. still booking units for the last few ones, even though pricings were crazy high, right? Yeah.
Yes, indeed. Yeah. So Grace, ask you one question. Is that what made you want to invest in properties in the first place?
Okay, because I feel like it's a sooner or later thing, right? So if I have the means, if I do it later, I'm gonna be outpriced it.
Yes.
And if I would say the budget that I could have entered in a 4 beta likely would have been a 3 beta in today's market. And I know I managed to get it near something that has a school, something that's near the MRT, not too far out. And I think generally it was a safe entry that I saw. Yeah, so I think property markets in Singapore are it doesn't go like stock markets, right? You don't get that kind of Bitcoin returns or crypto returns. That's not something that the market promises. But I think based on the policies that Singapore government has, protecting TDSR, making sure that, whenever they see it go crazy, they kind of have a cooling measure like how they did it for the 60%, with the aim of not crashing the market, but with the aim of kind of making it stable. So I think it's slow, but steady.
Yes, indeed. So that's when it can have a growth that able to at least get about 10 to 15% returns if you really leverage on loan. Yeah. And one thing that we also saw, the land bid prices are getting higher. We have been looking at the entire market to see what exactly is in the market for the next 3 years. So when you see the price getting higher and higher, we know that we have to, if you wait 2 years, 2.5 years down the road, there's a chance that we may not even be able to afford what we can today. So that's something that we see it coming. And we know that at least it's a safe entry and safe exit.
But that also doesn't mean anyhow buy, anyhow rush in.
So always
make sure it's a safe buy. I think safety in investment is always more important than going for something that is high risk and high reward.
Correct. Yeah. All right. Okay. So then for myself, it's something that is a journey for real estate investment. And for me to enter real estate investment, there's actually a backstory to it, which I always been sharing about family, a very brief one. But today, first time, I'll be very raw and share about what really happened to my family and what it makes me so obsessed about investment, because I know risk investment can either break someone's life, cause financial problem, or in fact, it can be able to change someone's life to be able to have financial freedom. So my family actually started in the right step. The first thing they did, was to buy a BTO. That's something that we always have a client who maybe at the start, they didn't have enough cash to start with. And maybe in the next 4 or 5 years, they are not able to gather enough to even go into a condo investment. Start
off somewhere.
It's always the first right move. And they bought one at Toa Payoh. And when they buy at Toa Payoh, the video, as usual, appreciated upon MOP. And what they did is, there was an agent who came in, told them to buy a condo. One thing is, back then, they have yet to sell a HDB. So in HDB, agents were just, just buy and buy and buy. So what happened was, he had to buy one condo, and notice that after buying one, the agent had to buy another one. And that's something that create another problem, because that moment at the time, condo that they bought,
Yeah.
they said feng shui very bad. My mom say, then we go, hey, why not you just buy one more? And that's when something very interesting is that media mortgage is about 1,000.
Yeah.
Okay. Then the first mortgage was 1,007. He bought another at 1,005. So imagine they have to juggle everything. And the monthly mortgage is about 4,500 including everything. Okay. And what people may not know is that back then my parents are not earning high income. Their income, okay, my mom was a clerk, my dad was a teacher. Total income they were getting was only, 5,000. Okay, so you add all the expenses they're having right now, housing, children, everything together is 9,002. Okay, so if you were to net off everything, deficit permanent top up is about 4,000.
So they really like over leverage
Yes.
at this point.
Correct. And that's when people back then were just like buying and say, okay, there's no TDS, there's no things that limit your loan amount. So that creates a lot of this kind of issue. And because it's deficit, they'll do one thing, which is to go into credit card. Okay, so it's very scary because credit card, if you know, the interest compound is doing 2.8%. Crazy. And if you know what my dad had to do, because he had to feed the family, he had to run, he didn't know, he was like working hard and just trying to fend for the family. So
keep drawing credit.
Draw credit. Yeah. So how to draw credit is this expense 4,500. When I started was okay, then it became 45,000. And this compounded 24%. Okay, and one thing that a lot of people do back then, in fact, now some people used to do it, which I highly discourage. Hear this, please at least pay on a credit card. Don't ever own a credit card.
Because that's the highest interest that you will pay. Yeah.
Correct. And some people just pay minimum payment and just simply.
So when people ask, should I take a personal loan to buy a property, right? Don't do it.
Yes, don't.
Because you are really over leveraging in that sense, really.
Correct. So that's something that we tell clients, don't do that. At least have a safety net set aside. And what this happened is this 45K, right? Okay, for your own credit card, 3 credit, 45K, 15K each. He borrowed more credit card to pay off the credit card. So you imagine, he had borrowed
钱滚钱
yeah. So you think, okay, I just drag my time for another 2 months, 3 months.
As long as I can drag, I just drag. But let me just settle like what is outstanding, then I just...
Yes, and just continue paying. And this, in fact, right, because he started owning 9 banks, 9 to 10 banks. So it started from a very harmless 45K. It seems low at the start. But then it compounded to 60K the next year. You can see after that, okay, he had to sell HDB. Okay, he managed to sell it after some time, about 1.5 years before buying the condo. In the end, he sold a condo, okay, for the first condo because he said, phone's not good. Okay, let's sell it, cash out, and then pay out some loan. Okay, but even in that, the third year, the credit card like compounded 90K. Okay, so the second condo, because he really, like the loan is getting out of hand.
Yeah.
And cash out to do something. But before then, he had to finance many things. And he know that if he were to pay off the housing loan and quickly buy a HDB, right, and just borrow 50% for the HDB, right, he can't pay the credit card loan anymore. It will compound worse and worse. So even after cashing out a condo, he cannot even pay down his credit card loan. And it actually compounded close to 120K. And because of that, at the end of the day, because of credit card loan, he had to file for bankruptcy in 2010. So this is something that struck me because I realized actually if things were managed properly back then, this kind of thing would not have happened. And to add things, to make things worse, okay, back then, the HDB that they bought, okay, it depreciated 14% after 10 years. Because it's a very old HDB, 60 years left, 65 years left. And when this happens, at the end of the day, okay, the property they bought at maybe 408K. 2020, 10 years on the road, 28K. And that's something that I realized a lot of people may have been in this position where they hold HDB for long term. And this HDB does not give them the returns they want, and come retirement, there's an issue. And that's what happened. And in fact, we were not the worst. People had lost 40% before. They bought at the peak at 2013. And meanwhile, the condo they sold appreciated at 62.65%.
So there's a lot of opportunity cost that they actually lost in that sense.
Correct. And in fact, if you hold it today, there's something that when I see today, it's quite crazy. 15 years, 137%. Means you buy 1 million property back then it's 2.5 million today. And they quit retire. Then the question is, okay, could they have avoided it? So when I analyze property investment, that's when I'll say I need to crack this code. And that got me very obsessed. And I will look back. Could things be salvaged back then? I realized there's only one thing that have to change. Very interesting. Number one, of course, sell the HDB first before buying condo.
Yeah.
Okay, but even if they take 1 year to sell the HDB and then still hold 2 condo, they could do one thing. They could have rented out both condos.
Which is surprisingly that they didn't, right?
Yes, because back then, very interesting. You say, hey, why you don't just leave one empty for 1 year? That makes sense. Because number one, back then, that unit was supposed to be sold. They want to sell, but my mom was thinking, should I sell? Should I sell? I don't want to dirty the place. Keep it clean. And I may want to stay there. So it was in a limbo.
Yeah.
And I decided to hold to it and I feel like I can hold. Yeah, so there's a risk, the perception. And if they had rented out both units, very interestingly, the total rent, 2.9 for one unit, 3.6 for the other unit.
Yep.
Okay, they could have net off everything and they get about close to 3,003 of pocket money back then. And now, of course, it's about 2008. Okay, they could have rented the same HDB estate at 2002. And if you minus this exactly same time, 2012, they could rent the same HDB, 2002, that will give them about $600 of excess cash from the property. They restructured the whole thing. And if you look at it, the household income back then, 5,000, instead of deficit 4,003.
Yeah.
Now they're 5,006 every single month. And a surplus of savings of 1,003 to 1,004. And that could have tied them through. So I realized one thing is that if property is done the right way, they could have done it. And notice that one thing I learned, most when you're buying, don't over leverage and have safety net.
Yeah.
So that's why we always tell clients, please don't expend everything in the cash. Have safety net set aside. That on top of your cash, you put a property. I say more. Sometimes even for the cash you give me, I still leave I don't expand everything. I still leave we still leave about 80, 90K, 70K at least to finance certain loan on top of their additional safety net. Yeah, so if they're done, okay, today, what will happen is that these two properties were appreciated close to $2 million, $1.7 million. Okay, one went out 613, the other one at 1.17. And we're holding after 15 years. Okay, 15 years, because last time the loan was actually short about 15 years. They could fully pay down the property, it compounded with the rent. And notice that this fully paid down property, they could stay in a condo. Okay, instead of now they have to restructure. I spent $1 million+ just to restructure the whole thing.
Yeah.
And what happened is that they say one rent out the other, okay, and get about 3 to 4K or 5K passive income, which is what they're getting right now. After restructuring and pouring in about $1 million+ just to help them to do this. And with that, right, if they ever want to downsize to a HDB, a 4-room flat, 500K, they could unlock $3 million of cash.
Yeah.
And that's something that can help a lot of Singaporeans retire.
Yeah.
So that's why we kind of real estate, it struck me because I realized that at the end of the day, right, if we were to invest in the right property and we'll be able to restructure our portfolio such that it's not just about buying condo to stay, lifestyle. It's an idea of stewardship.
Yeah.
How are we able to have the right way to invest in property at the same time have prudency in investing such that we can be able to retire like 10 years, 15 years down the road when we cash our property and finally downsize and retire with cash.
I think retirement is something that maybe youngsters don't really think about when you're young. You start thinking about retirement when you get old. But by that time, it's a bit hard to start planning for it.
Yep.
It's easy when it's young. It's just that people don't think about it, right? And sometimes it's just scary to think about the amount of money that you really need for retirement. Like if you really go and do the sums, if you really need and then you realize that, actually, if let's say today you need 5,000 for retirement per month, that 5,000 is not going to be 5,000 in 20 years.
Correct.
So that's why I realized the importance of really really staying invested, of course, within your means, of course, with it being affordable and not over leveraging in a way or making wrong choices. So really be smart about when investing and how you're going to make your money work for you.
If you expand on that point, at $5,000 of passive to retire in the future, you need at least to save up close to 2.7, 2.8 million, up to even 3.5 million if you really need that amount to retire. And without investing the right way, maybe some people play in stocks, but most people don't really know how. When it comes to retirement, one way that's safe in the long term run is always going back to real estate. And that itself could have changed your parents' life. If this $3 million today retire, 5% dividend, they could have gotten about 12K a month.
I think it's also because real estate have like SSD, right? People may see it as a good and bad thing. It kind of limits you that you have to hold it for 3 years. But I think around the good side of things is that stocks is very volatile. It goes up, it goes down, like what we see in the stock market these couple of days, right?
Correct.
And people that don't have the right mindset or are not guided properly, they can just offload anytime they want. When it goes down, they fear and then they just offload and then maybe it goes back up again. But I think the 3 year kind of locked you in a way that it gives you enough time to ride it out. Even if, let's say, there's a cooling measure or what, you're not immediately affected because it's not a 1-2 or 1-2 months or even 1-2. It's a 3 year kind of holding period.
Correct.
So that way it kind of safeguards in a certain way, I would say.
Yes, and with safety net set aside and enough cash, that's something that you can still be able to die through all this period.
Also, maybe you can touch on, the guideline for safety net.
Yeah, so it depends on your portfolio. If you're someone who is young, who is still working, and you have some parents' place to stay, maybe about 3 to 6 months, that's just something that, because you have backing or you have a place, you're not in a need. But once you create a family and things like, our safety net set guideline is about 1.5 years.
Yeah.
Okay. And of course, if you are someone who is going towards retirement, potentially we need at least 2 years and above. But of course, it's really based on the financial situation. So for us, it's always being able to set aside this. In the worst case scenario where you lose your job, you have at least something that's set aside to be able to tie through a loan. And that's what a lot of Singaporeans have doing. In fact,
Yes.
actually, without us even advising, people have the mindset, please don't over leverage. I think went through the very tough times of Lehman Brothers crisis, Asian financial crisis. They have seen the worst. And with TDSR, even if you want to over leverage, they can't. And there's something that have limited a lot of clients' purchasing power along the way.
And I think just to touch on the hyper side, good. I think QF actually asked, majority of the good price units from launch day is taken. Aren't you buying the overpriced units? So I always say, and it's a question that people always ask, and I always say that a development that doesn't make sense today doesn't mean that it doesn't make sense in the future. So that's why we always say, something that is not ideal today could be the most ideal in the future just because of how much prices have gone up.
Yes.
But of course, if we could turn back time, we would have gone to get the better unit. So I would always say that rather than look back at what you've missed out, try to understand what is the best option that you have in the market today.
Correct.
So we cannot predict the future, we cannot go and turn back the past, but what is the best option based on numbers and analysis that makes sense in today's market?
Yes. In fact, if you look at the upcoming land bid price, then you understand that these are data that we have to look at consistently and what is the inventory in the market. Because if we miss out this, potentially, we may not be able to get back the same price again about 3 to 4 years' time. So this is something that we need to look at this kind of data rather than looking back and say that, wow, I could have bought maybe a landed last time at maybe $1 million, but right now we can't. So it's always a long-term perspective for real estate. Yeah. Okay. And next, I saw one more question, very interesting. Also, Lim. Okay, any downside to investing a 3 beta plus study next to a master bedroom without a store? Okay, so it really depends on
a study.
Study, yes.
Is it like a proper study or is it like a little nook in a corner?
Yes, and notice that it's not just about the study. Also, it depends on area specific because different area there's different supply, different demand, and different kind of profile for exit strategy.
Yeah.
So like you can see, no matter park compact layout 936.
Yeah.
People are still willing to pay 500k higher for it because people may not need that agent store and they just want something that is more price and quantum wise as compared to a premium. So, and other areas where it is more towards a family area, potentially this could be a very pertinent factor.
Correct.
And notice that because end of the day, you need to look at what's the premium you pay for that particular study.
Within the development line, like let's say you versus maybe a compact or you versus let's say a 3 premium with let's say a store. What is the difference? If like the difference is 50, 60k, right? Then you know that potentially next time people may just go for the bigger one because then you're maybe not at a very good standing. But we know that the jump to the next one is like 300k. Then you know that people may not value a store for 300k. Then maybe you get a better standing. So I think it's very relative and comparative.
Correct. And also depend on district, which area, what's the gap you need to look at. Because every different district, they value their storeroom differently. So it's something that we need to go deep into so that we can have a better understanding.
Okay.
All right. Okay. So with this, we come to the end of the webinar. But before that, any last questions before we wrap up with the final sharing of how do we invest and what is the portfolio that I've grown over the years? Okay. All right. So with this, this is share the last part. This is the last part of the webinar. And that's our portfolio planning wise. Okay, my journey has been a journey of figuring things out. I made mistakes and real estate is not all rosy. There's always things that we need to learn accordingly. Okay. In fact, the first property that I bought, if you will look into the first investment property, was actually this place at Marina. So very interesting is it was a course that I first attended that I really, like my last savings, I just tell myself, the only thing, my first commission I earned for real estate, I still remember, I have nothing left in the bank. All I have to do is invest in myself. So when I attend a lot of courses, and one of the courses I attended, I was like, Marina is a good buy. Let's everyone come together. A lot of people bought and I was like, 5% discount, PSS
So it's like
cheap.
a hype. So you actually bought into a hype also.
Yes, when the 5% discount came in. So when I bought in Marina, PSL was cheap, the rental was great, got deferred payment scheme, I don't need to pay mortgage for 12 months to get rental. So I bought in. But after that, then I realized, one thing about this kind of property, there's always a backstory to it, why the PSL is cheap. Because the lack of demand and also quantum, which I will share on a personal basis one-to-one. The second property I bought was actually this place at Kaki Bukit. It was a commercial property. Industrial property, rental was at about 3.1k. subsequently, that's when learning from course is something that actually taught me. I won't say that it's something that is a bad course or things like that, because from there I also learned according how to invest in commercial. Buying into the next one, industrial property rental about 2003. Bought into the next industrial property about 4,007 for rental. Then same thing. The same course I went to, they have a bulk purchase for commercial property. Okay, so one thing I learned. Okay, this is something very, very personal to me lah. Okay, I won't share where the property is, but it's a new launch. Okay, commercial. So you have friends or agent telling you, hey, buy a new launch commercial. Okay, run. Because I also learned for myself. Industrial. For a new launch commercial, you enter into a new launch. Usually they'll overinflate the price. Okay, and they'll sell with very high loan you can borrow, they give you cash and all these things. At the end of the day, right, the problem with this kind of new launch commercial is when you sell in the market, you realize that hey, the price they quote to you is actually way overpriced. And upon TOP, when you want to rent out, it's very hard to rent out. So I also made a mistake for this where I realized, wow, the renter barely cover mortgage and have
and it's hard to rent because everybody's renting at the same time, right?
So maybe for 1 year or 2 years, you may not even get any rental. And that's something that you will be bleeding.
And people normally, they never really, they may not have set aside because they assume that I just need to think until the thing is ready because then rental was going to cover. But they forgot to factor in that maybe 1 year is going to be vacant.
Yes. So in fact, like people may, 3 months, maybe I can rent out, but doesn't. And not like when you rent out, the rental either you accept a very, very low rent that is no-brainer, people will take, which I did. And some people had to bleed every month, especially if the loan is not enough. They cannot borrow a long loan tenure. And then from there on, there was one choice that I made wrong and I learned. And that's something that I hope to share around so people don't make the same mistake. You have friends telling you buy a freehold commercial. We look out of 99% of the new launch commercial, most of them actually lost money. So that's one thing to take note. Okay, next, after I said, this is something that, I need to start to learn. So I learned from not one course, multiple courses, how to invest in property, talk to investors on the ground, learn from mentors who are coaching me about how to invest in property. That's when we discovered this concept called resale price gap, which we will share on a personal basis of how to analyze resale and new launch property, choose which and which. That's where investors in the first property called Yishun property. And this property, the rental yield is pretty high. Rent out during COVID-19 using co-living about 6,005. Okay, and this in fact was one of the top performing property that we have discovered because of our own research. And after that I said, this is the first property that is bought under my mom's name. To allow her to have the retirement income. The next property I bought was overseas property. I said, I already maxed out. I maxed out my cash.
So someone actually just asked overseas property.
Oh, yes. Overseas property investment.
So you can share your experience. So what happened to your overseas property?
So for this overseas property,
and why do you dabble into Philippines?
So very interesting. It was just a friend in one of the try error networking. And I was like, sounds fair. They talk about new launch in Singapore, price staging, very similar. They make money and things like that. So let's take a look. And it was purchased at 210K. Next to airport, seems very great. But later I'll share what happened for Philip and I had to forfeit the purchase. So back to overseas property investment like UK, etc. Of course, there are some that maybe it could be okay. But in general, one thing I noticed about overseas property, two things. One is the lack of familiarity of the place. If you go down and see the place and research and be very familiar with that, maybe it makes sense. But with unfamiliar place, a lot of data is not transparent to us. Then what happened for me, this is the run story about Philippines property, is that because I went and buy overseas, then I didn't know. Then I found out one thing is this is one bedder. By buying one bedder, double the price of landed nearby. And we found out 1.5 years later when I really went down to scroll the research and do my own research, which I didn't have access to this data back because things are not very new. So with this lack of transparency of data, and you only see data that is good because when we sell this kind of product, it could be good. But when it go down there and you don't do a proper homework, there's a risk of potentially having a problem with buying the wrong property.
And I think with overseas property, there's also a problem of exchange rate that, let's say, for example, you bought something in Malaysia, just an example, and you profited, right? But because of the exchange rate that against Sing dollar, when you actually, if you don't convert it, it's fine. If you do convert it back, then any profit you may have gained could be lost through the exchange back into Sing dollar also.
Correct. So the FX risk, which happened in UK also, to our UK property, FX, UK pound has been shrinking. So this itself, if you need to factor all this risk in before you invest in it, and with a high interest rate, 6-7%, if you were to really factor in the returns, right? Yeah. If you can get something safer, considering between UK property and residential property in Singapore, I'd rather choose something that is of familiarity where we can see and touch, especially if you are in Singapore. All right. And next up, okay, the 8th property that I bought is a rental property, a resale. Once again, using this thing called resale price gap is very amazing. It went up by about 32%. Currently, we are staying there, and in fact, looking to reinvest later on. Yeah, so there's something, the last property that I bought before I decided to say, hey, okay, name max out already, loan max out already. Cash, I really, okay, let's start saving, and then I started reinvesting in the business. So that is when the beauty of property, right? I already say real estate is illiquid. But there's actually, I would say, I'm going to hack, but rather a well-known fact that there is this thing called GIAP. Okay, it's a loan. Okay, loan, but loan at maybe 2% or 2.5, but it's covered by rental. So it's not really, I would say, as long as, my school of time is this way. You buy an investment property. As long as, even after GIAP, the rental can cover the mortgage and pay off every single month. And you have, of course, safety net. And you reinvest this into other things that is more liquid. That's when I went into stocks, which honestly lost about 40%. A lot of money.
It's just very volatile. I mean, stocks, if you are someone that is in the stock market and you really read into it, it's like how we really read into real estate, right?
Yep.
People that do stock, I think day in, day out, there are people that earn a lot.
Yes.
But you just have to be, whether it's real estate or stocks, don't just go in anything blindly. You really do your due diligence.
Yes, I agree. So if you are very into stocks, really, that's something that I would say is a good way to diversify. I do agree that you don't just lump everything real estate also. But kidding is, even for myself, it's just unfortunate, very unfortunate that there's a running joke lah. They say, whatever I buy, just don't buy Cameron. In our team, they say, whatever I buy, I go and buy, like, I bought Baba, 259, and then now you know where is it. Okay, went up again.
Say contact. Thanks, Nancy. Yes, just scan a QR code and someone will get in contact with you, right? So back to Chris, if you want to know what he buys so you don't buy,
just let me know. I'll tell you the whole list that I bought, and then
you just don't buy.
Just don't buy, yeah. That's a running joke.
Stocks.
Yeah, just maybe me and stocks. But I feel like it's good to always diversify. And there's S&P 500, which is the only one that is still decent.
Or if you guys want to share with us your tips on stocks,
yes, let me know.
Feel free to share with us also.
Spend almost like a few, like 10 to 20K just learning about stocks. But then, I mean, in terms of courses, but I don't know why, I just need some time to crack the code. Okay, and then after that, one thing on property, interesting for my property, why the rental keep going up and up, now getting about close to 500K of rental per annum, right? It's because the rental at the start may be very low, maybe 2008, but I slowly increased to 3750 for my calculated property, and then it went up to 4005. So the good thing about rental, again for commercial, is more for passive income. I won't say it went up a lot in terms of capital appreciation, but if you look about passive for retirement, last property, maybe it's something that you can consider. But of course, the market shifted, so you don't get as much rental as compared last time. Rental as compared last time. And then, as I mentioned just now, the new launch I bought that for the commercial, don't buy that. Upon CSC, I was bleeding. In fact, for 2 months, I had quickly lowball.
So Chris has tried and error, so that you guys don't have to
please don't make the same mistake. Yeah. So one thing I learned that last time, market was 4,000 to 4,300. For example, purely saying that, I just never mind 3,800, 3,700, and just accept a low rent and just move on. And that's something I noticed. Upon CSC, the mortgage went up 4,300 at the bleed, and then now barely the rental cover the mortgage. And that's something that we are looking to offload a lot of them, and they can't fetch the price they actually really wanted to. So it's barely break even. Yeah, so that's something that I learned currently. And once again, the Woodlands property went out rental, and then subsequently 2023, that was when I decided to forfeit the Philippines property. Because that property, I noticed one bidder selling a landed price. And then I found out later, and I had to forfeit not a lot, because the down payment is progressive payment. Yeah, so in the end, I had to forfeit about close to 60% of what I put in, but I cut lost about
at least
8K,
you can take 7,000 back.
Yeah, 7,000 back. So that's a blessing in disguise. At least got money back, and the developer didn't really bankrupt or do anything like that, which is another worst case you buy into some Malaysia property. Yeah. In fact, after that, you can see Kaki property rental went up by 4,006. Okay, then because this property, all of these property are like 30-year, 40-year, 50-year lease. So this already hit about close to 20 years. So I had to liquidate and sell, make about 6-figure capital gains, and by rental, it was decent. But I would say to repeat this again, honestly, today's market hard, because all this price industrial have went up quite a lot recently. The rental return are not as high as before, so it's even harder to find right now. Yeah, so one thing I learned, I'll share with you, is that in a while, is that as for rental, I found out if I reinvest all this money into a residential, just lump into one, and be able to capital appreciate overall, it will make about 2 to 2.5 times more than rental.
Okay, yeah, but I think for Chris, his case was a bit different because of family financials, right? The goal was really to kind of retire your parents, so that's when you actually look into passive income in terms of rental. But of course, after you calculate, which you will be sharing, right, the breakdown on the rental versus the capital appreciation also.
Yes, correct. So that's something I'll run through in a while. Yeah. So if you're looking to retire, okay, there's something that may be a consideration. But if you talk about capital accumulation, capital preservation, the long-term run, residential is something that can potentially have a high returns. Okay, then after that, I did this thing called gear up. Commercial property, you can also gear up, which is quite decent. Okay, and using this cash to, in fact, like put back the business or put back in things that can compound and give a high returns. And that's why it gives my the pot of gold to even go into higher returns when it comes to the next residential property. Then bought into Woodlands property. Okay, the Woodlands property, the rental ran out was 3,500 from 2,000. You see, it went up by almost like 50% to 3,500. And the next property that I always recommend for client to go into, last property that they plan to retire and not have capital appreciation anymore, is buying the jumbo dual key, which my dad, in fact, he went through bankruptcy before. There's not all hopes are lost. If you really go through a 10-year period, after a 10-year period, right, there's a cooling period where you have to, there's some ways, it took about 3 years ever since I started property journey to make his credit rating better. And from there, right, finally, because he offended 13 banks, after that, 13 banks.
You offended 13 banks.
13 banks. So only 2 banks not offended.
Not offended.
So it was by God's grace. God's grace. Because this last 2 banks, one bank rejected because of his 14
so
banks.
got one last bank.
One last bank and said, okay, I give you a very high interest rate. Even at 4+%, it's still okay. I found out because the rental itself will cover and he can get a decent rental, about 4.7 So there's something that cover his retirement, and within 6-7 years, this will increase the rent to finance his retirement life from 65 onwards. All right. And then last part, okay, for me is, okay, the thing about gear up is that as long as, I found one thing, if you were to buy a property that appreciate, if you know how to gear up right, technically it's a no money down. Because the initial down payment you put in, right, is already cash out. And of course, it's always not just to take out money and just spend, but rather how do you reinvest it? And of course, have safety net. So it's always combining. And from there, at the end of the day, is to find a property that can appreciate in long term run. Okay. And then the 6th property count, the last one before under my mom, okay, appreciate about 361K, okay, in like 3 years. Thank God. And we sold it off. And then same thing. When it comes to the last phase of retirement, what I did for my mom is to buy a high rental property. So it's always depending on phase in life. If you're someone who are simply just starting out, capital appreciation is very important. Because high rental property, the capital appreciation is not as high. Yeah. And if you are retiring, okay, soon, in the next maybe 1 year, you're going to really have a retirement life, instead of going for capital appreciation, then that's when people look into places like dual key units. They can potentially give them a rental income. But of course, if you're 40 or early 50s even, their potential still can be one or two cycles. Yeah, 2 cycles. So depending on the time you plan to retire. That's when I bought the last property at Tanjong Pagar. This is her forever property already, not planning to sell anymore. The rental income is 6,003, mortgage about 3,000. He get about 2,500 passive. And that itself, as a housewife today, after stepping down from her job, this is really something that is substantial to give her retirement. And when you pay off the loan later on, which I plan to pay off as much as I can, so to lower down to 0.
Yes.
The rental income 6,300, you got a 7,000. That is her retirement sum, which I think is a very beautiful thing. If people can use property as a defensive play to retire in the long term run. Yeah, with one owning a property and the other one a dual key property to rent out one side. Imagine that would be about close to 11K of rental income that can finance someone's retirement for long term, just having 2 property. Okay, then last 2 more. Okay, once you accumulate a certain amount of cash, for me, I am someone who is a business owner, planning to invest with the business first. I realize the key thing for business to scale and to be able to compound on the returns that I get is actually much higher than property. But property is always a good diversification of your resources. So that's when, after accumulating a certain amount, that's when I bought the HDB shop. And that itself sort of like, I would say, allow my wife to quit her job. Because the rental income, passive income I get, about 5,000 is the income that she can use to replace the current pay. Yeah, so that itself allow her to go full-time real estate, and that's something that I'm very thankful for. To end over here, okay, my sister, back then, okay, that's a 200K. You say 200K, I can't buy anything in the market. And that's when are we able to like sometimes support a family member to bless them to see how can start the real estate investment journey. So if you're someone who just starting out and like, okay, I'm 200K, I really can't afford property. Sometimes parents and things like, if you can support a little bit to help the children start the investment journey, they will speed up their life, because if this cycle make me 300K, 400K, or whatever they put down, they can compound and subsequently use these returns from the first spot of goal to speed up the entire journey. The next one. So that's something that give her about 11% ROE just based on the returns of property. Yeah. And the end of over here, this was the last property that I bought, one of the big ones that I decided to settle down in the long term, I would say the next 3 to 4 years time. At this place called Ori. It's a 4-bedder at Toa Payoh area. And this itself, I noticed one thing is because if I look back at rental yield and capital appreciation, if I look back at whole portfolio, which I'll share in a while, the returns of new launch, if I talk about in a short term period of time, okay, the 900K can easily replace close to 15 years of rental income. And this is something that we have been analyzing as Grace. We have been looking at the resale and new launch gap. And we traced something very interesting where resale for at Trevista, 16-year-old was sold at 3.18, something sold at 3.25 for something that is a bigger balcony. And Ori back then, a 4-bedder was going at about 2.98. So for a 16-year-old project, a resale, I'm actually buying cheaper than a resale in the market. Rare, but there are property that you can find it with a bigger floor plate. Okay. And if I buy cheaper for some 16-year-old, there is a gap of about 200K, which I can easily, I would say, resell at a higher price at 3.8, 3.9 later on and justify the gap for a 16-year property.
I think it's something that we are seeing in the market, right? That like what you mentioned, quantum is very important. While in the past, a lot of people actually look at the per square feet gap. You realize say, yes, it's a very big floor plate. But if someone were to compare like similar quantum, a lot of them would prefer to have something that, they don't have to worry about the lease decay.
Correct. Yeah, so with this, right, we are able to identify this kind of property that potentially, if you buy a new launch cheaper than a resale, same price as resale, or slightly higher than a resale, this is something that we observe through analyzing 311 condo. There's a common pattern that allow them to appreciate over time. Yeah, so with that, right, if I were to summarize the entire portfolio, I just noticed one thing is to wrap this up, is that you can have very high rental income, which for me, about for 3.9K rental income up to date, okay, every single month, that's something that is allowing my parents, my wife, myself to at least finance my basic need. Now it's very full focus on investing back to businesses, investing back into maybe another commercial if I want to, but I realize the returns when it comes to rental, although for the 3.9K, you can see the rental that I get, net, everything costs, interest, everything, right? I get about 13.4%. It's assured, no problem. But the one that made me the most, if I realize, is actually capital appreciation. Which in this case, if you're young, you're starting out and you really want to start investment journey, instead of focusing on the rental, like get 1K or cover mortgage every single month, focus on getting a property that is very appreciated, because you can see the appreciation per year is 22.57%, almost double of that if I were just hold on to a rental. And that, in fact, if you look at even new launch, you look back, the returns, as I mentioned, is now 15 years of passive income. And this helped to compound and allow us to transit to a retirement that is able to be sped up with more cash on hand rather than one that is just simply collecting passive income.
I think a lot of people that look into rental, they often overlook the cost that is related with rental, right? Like, of course, you have to take into account vacancy, you have to take into account interest costs, you have to take into account that if you earn, the government wants to earn, so you have to pay rental income, you have to pay property tax, you have to pay income tax on your rental. But for capital appreciation, fortunately in Singapore, the government doesn't tax us on capital gains. So that's a plus side from why some people focus more on capital appreciation while they are still young and only transit to rental income or passive income when they are looking at retirement at a slightly older age.
Yes, indeed. Yeah. So with this, I hope that it is very transparent. First time I'm sharing this, but I hope that this gives you a perspective of risk investment, because every single one, the investment strategy is different. There's a cookie cutter approach to everything. You can be young, there's a way of investing. You're retiring next month or next year. The investment strategy is different. So the key thing is to find the right investment strategy for yourself. And from there on, right, you are able to really use real estate investment as a tool set to retire. So based on life cycle, okay, if you really look at someone who are young, that's when more towards capital accumulation, capital acceleration in terms of the initial capital. When you hit 40, 50, that is when potentially you can sell one, buy two, you can get, that's always the ideal situation. But once you hit 50, 60, above 60, that is when you are winding down towards retirement. Potentially, if you succeed, you have another 10 years more to go, maybe one last flip is still doable. But if it's purely next year, you plan to retire, okay, no longer want to work anymore, then you can openly consider passive income and not really thinking about about capital accumulation anymore.
Yeah.
So it depends on your stage of life. And with that, our JNA team, investment team, and any broker who brought you here will be more than be able to advise you how do you actually embark on this journey.
Yeah, so I think before you take the next step, right, speak to someone to really plan out in the long term. Don't just look at the next purchase. Look at, what is your ultimate retirement goal, how many cycles, or, for some people, it may not be purely investment. Then if let's say you have two names, right, how do you settle it? Should you buy it together as a 991? Should it be 50-50? Work with someone to really work this long-term plan out for you before you even take any step, because what your next step will be a very important one in your next one again.
Yes.
Yeah. So really do consider all these options before you really make the decision.
Yep. So it is come to the end of this video. I hope that you enjoyed this entire content of 2 hours, and we hope that this is very value packed, and
Correct.
we just want to value it to you in the research area.
Yeah, if you ever miss any of the content that we've gone through, right, all the new launches coming up as well as the land bits, or if you want to really speak to someone to really just restructure your portfolio and see what are options, always just contact our QR code over here and we'll have someone reach out to you. And also do search us up on TikTok. We are planning something new, potentially a TikTok live. We are seeing how we can value add to you guys in terms of providing more information, more fun content. So if you have any ideas or what kind of content you want to see, also do just reach out to us, let us know, so that when we start out our TikTok live or when we produce content on Instagram or YouTube, we can do it based on what you guys want to see also.
Yep. So with this, I come to end this video. My name is Christian.
This is Grace. We'll see you in the next live. Bye-bye.
Bye.